Good morning, everybody. Welcome to our very first ever Financial Education Summit in South Africa. My name is Tembisa Marele, and I'm the Head of Communications at the FSCA. And as you know, this summit is a collaboration between the FSCA, the JSE, Visa, and the Financial Services Consumer Education Foundation. It's a great example of collaboration because it's also around a topic that we all care about. There are two reasons I think that we are here today. One is that we all agree that CFE, or Consumer Financial Education, is important. We all agree about that. Secondly, we are all doing good work in our own ways, in our little pockets, to try and solve the problem of low financial literacy and low education among South Africans. But today, for the first time, we are pulling everything together, pulling all of our resources, pulling all of our efforts to make sure that we have greater impact, not just for our sector, but also for South Africa. And so over the next 3 hours, we are going to be hearing from the Commissioner of the FSCA. We'll hear a global perspective from the OECD. We'll have a number of panel discussions where we will delve deeper into this topic. And then all of it will culminate in a set of commitments that we will all agree on. And that will be our guiding light, our North Star, if you will, when it comes to this topic. There's no expectation today that that commitment or charter or whatever you want to call it will be signed today. It will be signed later, but the idea today is that we get all of our thoughts, we brainstorm, we talk about the topics, and we agree on a way forward. So before we kick everything off, just to set the tone for today, please can we take a look at the screens for this video? Thank you very much. I hope that even with the dip in sound here and there, you were able to at least get the essence of that video, which is just to give highlights of some of the work that's being done when it comes to financial education. Thank you very much also to the JSE for hosting us today. Unfortunately, the Group CEO of the JSE, Ms. Leila Fourie, couldn't be with us in person, but she did send a video through and she wanted to say a warm welcome to all of us. Take a look.
Please accept. Good morning to you all. Please accept my sincere apologies for being unable to be with you in person today. It's a genuinely great privilege for us at the Johannesburg Stock Exchange to host you today, and I welcome you all to what is a critically important step in the ongoing evolution of our country. I'd like to thank the Financial Sector Conduct Authority for having the foresight to convene this inaugural summit on financial education. Because if we are to transform our economy, we can only do this through participating in it. This is why our JSE Investment Challenge, which has in excess of 45,000 high school learners and university students taking part this year, is so close to my heart. The economy makes the wheels of every society turn, and we are all part of this great machine, even though it doesn't feel like it for many South Africans. The moment we buy something, we are part of the economy. The moment we earn a salary, we are part of this financial machine, borrowing money to buy assets like cars or houses and paying tax. But without the knowledge of how the economy works, we will never be able to make the economy start working for us. For far too many people, annuity income through pensions, savings and investments is a mirage, a pipe dream. It doesn't have to be. In fact, it shouldn't be, because this country was built off the back of private investment, people helping other people transition from micro to small and medium enterprises, and eventually the cornerstone of an inclusive economy is financial education. When we know how best to use the money that we have, we can achieve an independence that was denied to so many of us for so long in the past because of the laws of time. Today, that same financial independence continues to be denied to so many because they simply do not know any better. Less than half of our nation is financially literate, which puts them at an immediate disadvantage, and it starts with their own personal finances. I'm very proud of the initiatives that the JSE has developed as part of our contribution to boosting financial literacy. From the JSE Investment Challenge to the virtual trading game and She Invests, which looks specifically at female financial literacy and economic empowerment. But all of this, as significant as it is a drop in the ocean compared to the challenge that we have in this country 3 decades after the end of apartheid. So today, as you sit down to deliberate upon and develop a draft financial empowerment that will guide the sector in its drive towards financial education, the words of our founding father, Nelson Mandela, are particularly apt. The greatest wealth of any country, he said, are its people, worth so much more than all the diamonds or the gold beneath the soil. But that wealth means nothing when people are in poverty, because poverty takes away freedom. Financial literacy is the only way in which we can both break the chains of poverty and truly allow the wealth of our nation, its people, to flourish. Good luck with all your deliberations today, and congratulations again to the FSCA for convening it. Thank you.
Leila, and as she said, accessibility is the entry point, and that's why we've chosen that as the theme of our first summit. And as we deliberate, that entry point will be our guiding light into what we want to finally come out with at the end of today. And so, ladies and gentlemen, just a couple of reminders. One is the program is available via a QR code. It'll be on the screen and you can access it from there. And in that program is a full list of all of the speakers and all of their bios. And so you can get to know them a little bit better. And then the other thing is I'd like to welcome our online audience. We are also streaming virtually. We will be getting some questions from them throughout the morning. And as they come through, we will also incorporate those into our deliberations. And now, as we prepare to kick off, I'd like to welcome the Commissioner of the FSCA, Commissioner Unathi Kamlana, to give us his keynote address.
Thank you very much, and good morning, everyone. Let's try that again. Good morning, everyone. Right. It's a real pleasure for me to welcome you to this, our very first Financial Consumer Education Summit. I'm really delighted to see from financial institutions, leaders from industry bodies, government, and other key players gathered here this morning. I was telling someone earlier that we actually didn't have to cajole or blackmail anyone, didn't have to threaten taking away licenses or any of that sort. We just asked nicely and CEOs came, and here you are. Thank you very much. Your presence is a real testimony of our shared commitment to empowering South Africans through financial education. In fact, by just coming together like this, we've already made progress in demonstrating that we, as leaders in the sector, are committed to this important cause of creating accessible financial education for all in South Africa. We chose this theme for the summit because it really captures the essence of the message we want to drive home today. That financial literacy is an essential, although not sufficient, precondition for economic well-being. I'm sure you'll agree that financial education has come a long way from simply it being understood as offering basic tips on budgeting and saving. Today, it's about much more than that. It's about empowering individuals with requisite skills and knowledge necessary to make informed financial decisions, protect oneself from financial missteps, and build the confidence to engage with sometimes complex financial products and services. It is also about building resilience against economic challenges and ultimately enhancing the overall well-being and even economic stability of the country. So it is with this broader understanding of financial education that we've convened this summit. We recognize that the challenge facing financial customers today, whether it is economic pressures, increasing vulnerability, the rapid evolution of technology, all of them, they demand a unified approach to financial education. It is only by working together, pooling our resources, and strategically aligning our efforts that we can ensure that financial education is not merely accessible, but also impactful. We all know that the rising cost of living is hitting South Africans hard, with high interest rates and rising unemployment, high levels of indebtedness, all of these creating financial strain on household balance sheets. In 2021, the Human Sciences Research Council reported that 71% of the population did not have emergency savings, leaving them particularly exposed to financial shocks. Additionally, millions of credit-active consumers are behind on their debt repayments by more than 3 months. And the COVID-19 pandemic also just further exposed how vulnerable many of our households are to financial shocks. So financial education is important, is particularly important in this economic reality, as it assists people to go through tough times and empower them to make informed decisions in safeguarding their financial well-being. Without this proper educational foundation, many end up making choices that worsen their financial situation rather than improve it. Take, for example, the soon-to-be introduced, soon-to-be implemented two-pot retirement system starting on the 1st of September. Two-pot, two-component, whatever you want to call it. The system is designed to allow people to access part of their retirement savings early, offering some much needed financial relief. The undoubted outcome, however, is that without a proper understanding of the impact of these early withdrawals, there is a real risk that members of retirement funds might end up jeopardizing their long-term financial security, because the retirement savings are for retirement. The temptation to dip into retirement funds early, especially when one is under pressure, could leave many South Africans with insufficient savings for their retirement years. This really highlights why financial education is so crucial. People need to fully understand the impact of their choices, whether it's accessing retirement savings early or engaging in policy debates about where their retirement savings should be invested. Financial education is at the center of shaping customer outcomes in the financial sector. In this context, we urge all stakeholders, retirement funds, employers, unions, and others to intensify their efforts to ensure that their members and employees have the knowledge they need to make smart decisions about the impending two-pot retirement system. It's important to note that this responsibility does not rest solely with financial institutions. It's incumbent upon each of us to educate our families and friends the risks and the benefits of the system. There's a lot of content, by the way, on YouTube on the two-pot system, so you can also tap in there for more information. We should encourage them to think carefully about their financial decisions and to seek advice if they are not sure. Another key issue that really calls for a unified approach to financial education is the subject of the rapid innovation and technological advancements happening in the financial sector. Whether this is through new products such as crypto, the digitization of channels through which financial services are distributed, or the rapid use of artificial intelligence in the provision of financial services. Sure, these new products and services offer convenience and broader access, but they also present risks, some significant risks, especially for consumers who might not fully understand how these innovations work, how these products perform. The increase in digital fraud and online scams underscore this point. As such, our financial education efforts need to keep pace with these innovations. We need to make sure that consumers can take advantage of these advancements without falling prey to the risks that they bring. Financial education is also essential to achieving true financial inclusion. Yes, we've made lots of progress as a country in promoting access to financial services, with just over 80% of South Africans now having a bank account. But true financial inclusion remains a challenge. Just having an account doesn't mean people know how to use it effectively, as evidenced by the data from the FinScope Consumer Survey 2023, which indicates that 37% of account holders withdraw all their funds immediately upon receiving a deposit. This behavior points to a deeper issue. Many individuals may not fully understand how to use financial products and services to meet their needs, whether due to mistrust, limited income, or simply not having the right knowledge. But the adequate financial education we can empower through adequate financial education, we can empower people to maximize benefits of the financial services available to them and understand the key risks and even contribute to product suitability. Another example is the widespread use of funeral insurance, sometimes used and understood as a form of saving, and the low uptake, on the other hand, of other forms of insurance. These are signs that many people don't fully grasp the range of financial products that could better serve their needs. If we don't address these with proper education, true financial inclusion won't happen and consumers will remain vulnerable. Given the severity of the issues that I've highlighted, it is quite clear that no single entity's financial education efforts or programs can address them alone. This is why a unified and collaborative approach is essential to effectively tackle these challenges and ensure that financial education reaches every South African in a meaningful way. National Treasury's policy document, which introduced the Twin Peaks model of regulation in South Africa, underscores the need for collaboration. Structures like the National Consumer Financial Education Committee and initiatives such as the Money Smart Week South Africa have been instrumental in fostering this unified approach. However, the rapidly evolving financial sector landscape demands that we go beyond just working together. We must commit to having clear and measurable targets if we want our efforts to have a lasting and meaningful impact. For our part, as a market conduct regulator of the financial sector, the FSCA has been actively promoting consumer education, a commitment that dates back to the time of our predecessor, the Financial Services Board. This included the establishing of the National Financial Education Foundation to fund and enhance financial education initiatives across the country, as well as rolling out various financial education and literacy programs. The introduction of the Twin Peaks model of regulation through the Financial Sector Regulation Act 2017 has further elevated our role, placing financial education at the core of our mandate. This is based on the recognition that financial education is not just an add-on to consumer protection, it is fundamental to it. Without financial literacy, even the best regulatory frameworks can fall short of fully delivering protection for financial customers. Therefore, our strategic approach centers around empowering consumers through direct financial education, while ensuring that the financial education provided by financial institutions is appropriate and beneficial to consumers. We appreciate the feedback we've received from stakeholders on our financial consumer education conduct standard, which will be finalized and implemented hopefully later this year. The intended outcome of this approach is to create empowered consumers, individuals who understand their rights, are knowledgeable sufficiently about financial products, and are better equipped to recognize fair and unfair treatment. While we are doing good work in this area, we recognize that we cannot do it alone. The role of financial institutions is crucial. These institutions are on the front lines. They directly interact with consumers and shape their financial behaviors and decisions all the time. However, the commitment to financial education should not be reduced to a checkbox for compliance with the Financial Sector Code, which requires 0.4% of annual net profit after tax to be spent on consumer education. Nor should it be seen solely as a matter of corporate social responsibility or as a way of creating awareness of specific products and services. Both of these approaches fall short of making a meaningful impact, as they often prioritize compliance or marketing over genuine consumer empowerment. Financial education should be embraced as a business imperative one that, when invested in adequately, can build trust, enhance customer loyalty, and ensure long-term sustainability. A well-informed consumer base is more likely to trust the financial institutions they interact with, leading to stronger customer relationships, fewer financial mishaps, and a far more resilient financial sector. I want to acknowledge and commend those institutions that have already recognized this and have adopted an approach that treats financial education as a business imperative. Your efforts serve as a model for the industry, demonstrating the profound impact that a genuine commitment to consumer education can have. Without the proper foundation, our collective efforts and to enhance financial literacy won't reach their full potential. As such, the education sector is key to laying this foundation by integrating financial education into the curriculum and introducing young people to financial concepts as early as possible. Continuing this education throughout their schooling years, I want to acknowledge the important work that the Department of Basic Education has been doing in collaboration with other stakeholders to incorporate financial education into school curricula. The department will later on share insights into some of the work that they've been doing in this regard. A round of applause, please, for DBE. Efforts to promote financial education are not limited to the stakeholders I've mentioned so far here. There have been vital contributions from other key players as well. Non-profit organizations, employers, trade unions, trade industry associations have all been instrumental in driving the financial education initiatives and agenda across all segments of society. Today's summit is a unique opportunity for us to consolidate all of those efforts. As we embrace a unified approach to financial education, it's crucial that we also tap into technology to expand our reach and make our impact bigger. The Banking CEO's Fireside chat later on will delve into how the banking sector is using digital platforms to boost financial literacy, and I think we'll all gain valuable insights from that discussion. In conclusion, I am confident that this summit marks the beginning of what promises to be a truly transformative and collaborative effort amongst stakeholders. Our hope is that the conversations we engage in throughout this summit will not just end as a dialogue, but will evolve into formal, actionable commitments on this important agenda of financial education. These commitments will serve as a guiding framework to ensure that our efforts are sustained, coordinated, and ultimately successful in driving financial literacy and inclusion across South Africa. I wish to extend my thanks to everyone who's here, including our distinguished guests, speakers, moderators, and panelists, for taking the time out of your busy schedules to join us this morning. Your presence here underscores the significance of our collective mission to advance financial education. And a special thank you goes to our summit partners, Visa, the Financial Services Consumer Education Foundation, and the JSE for their generous support and for making today's event possible. I hope you find the discussions enriching, forge meaningful connections, and explore opportunities for collaboration that will propel our efforts forward. And I thank you very much for your time.
Thanks very much, Commissioner. That sets the tone for what is happening in South Africa That's what the landscape looks like when it comes to financial education in our country. But of course, we've got to find out what else is happening in other jurisdictions. How do we benchmark what's working, what's not? And that's what we will get to next. But before we do that, someone here might stay longer than they intended if we don't get to this part. If your registration number for your car is LC09JMGP, your lights are on, and you might have trouble getting home after this. Also, just a quick mention, the QR code is on there, but also it's at the back of your tag. The back of your tag, your QR code is there for the rest of the program. At this point, I would like to introduce our next speaker, who will give us the global perspective. Magda Bianco is the chairperson of the OECD INFI, which is the International Network on Financial Education. She is also the co-chair of the G20 Global Partnership for Financial Inclusion and the head of Consumer Protection and Financial Education at the Bank of Italy. Let's give her a round of applause as we check that technology will not fail us with this. Magda, can you hear us?
Very well. Can you hear me?
We can see that you are speaking, but we can't hear you. So let's try and fix that.
Okay. Can you hear me now?
I still can't hear you, Magda.
Okay. Can you hear me now?
Absolutely. You see, we love it when technology is actually helpful and it wins. Okay. Thank you so much. Ladies and gentlemen, if we could please give a round of applause for Magda.
Thanks a lot. Good morning, everyone. It's a really great pleasure to be at such an important summit today, even if only virtually. And it's a great honor, actually, to speak after the very important words of Commissioner Kamlana. Let me share my, my presentation, and I will ask you to confirm that you actually see it. Can you see the presentation?
Yes, we can.
Okay, okay.
We can, go ahead.
Okay, so let me start with some words about financial inclusion, actually.
Sorry, Magda, sorry to interrupt you. May I ask you to put it in presentation mode?
Yeah, can't you see it in presentation mode?
Nope.
Okay.
There we go. Perfect. Yeah, you may proceed.
Okay, like that is fine. You see it?
Yes, we do.
Okay, perfect. Sorry for the delay in communication. Okay, so some words about why financial inclusion, which we define as, actually Commissioner mentioned it, which we define as the access to financial services. So why financial inclusion is important. It is for individuals, for households, basically apart from the basic evidence that having access to financial services, a bank account to start with, is actually essential for our daily life and especially for our economic and social life. We also have by now a lot of evidence, empirical evidence, that for individuals, an access to financial services actually ensures greater resilience in case of shocks, but also the possibility of planning for the future, but also for micro and small enterprises. It entails greater productivity and the possibility to grow. In general, it ensures greater financial health or financial well-being, and we will come back to this afterwards. But it's also something that that is really helpful, that matters also for countries, for systems as a whole. Financial inclusion of citizens means a greater possibility to grow in a stable, in a sustainable way, also through a better allocation of financial resources. If access to financial services is widespread, it implies to be able to reduce inequalities. It also increases financial stability, again, if it's qualitatively high. Of course, there are conditions to be satisfied for all this to be true. Where are we now? Since 2011, the World Bank actually measures financial inclusion through a survey which is called FINDEX. And let's proxy it at the moment. Let's proxy financial inclusion as access to a bank or a mobile account. What we see from this survey, from the last one in 2011 to 2021, is a substantial increase in financial inclusion. From 51% of the total population, of world population, having an account in 2011 to 76% in 2021. Of course, there are wide variations across countries, as you see from the colors. The darker one means higher inclusion and the lighter one lower inclusion. There was a substantial help by digitalization, which was really pushed by the COVID pandemic, basically. And I must say, our work with the Global Partnership for Financial Inclusion, which is the G20 working group, which is active since 2010, aims precisely at identifying policies that help, that work in increasing financial inclusion overall and for each country and for each group. Well, this is the positive side, a great achievement, but there are some buts. First, 25%, 1/4 of the world population is still excluded, 1.4 billion people. Well, there are more excluded in some areas, for example, sub-Saharan Africa countries, and there are more people excluded within some groups: women, elderly, less educated, poor, those living in rural areas, migrants. And I must say that even in some developed countries where actually formal inclusion is close to 100% in the average, there are many gaps for these groups that I just mentioned. Sorry, can you still see the presentation? Yeah. But there is a second but. Also where inclusion is high, and in a rather homogeneous way, I would say, or where it has increased substantially, there are now worries about possible negative consequences of a very rapid increase in digital financial inclusion. For example, first, for payments, where the rise in inclusion has been more substantial, risks of frauds and scams have increased everywhere. For those with low digital competencies, the elderly, for example, but also for others, for youth. Second, given the easiness to use some digital financial instruments, for example, some debt instruments, think of buy now, pay later, the risk of over-indebtedness is increasing. And here it regards more those who are, say, risk lovers, for example, young people, but it can be shared by others. It is becoming a problem in both emerging and developed countries, and we see it, as I said, in many countries. But there are also risks of investing without awareness of the risks. Think of crypto assets, especially for younger people. Third area, the risks of new exclusion. Given the digitalization of financial services, given that it is producing, in a sense, a lower availability of traditional instruments and services, this might create new exclusions for those who are less digitally literate. Again, typically elderly, but not just them. And fourth, going forward, we might also have new forms of discrimination through the use of technology. Think of the use of machine learning or artificial intelligence helping financial service providers in creditworthiness evaluation. Again, if it's not well governed, it might produce discrimination. Now, how to address these risks, how to solve them in a sense, and hence what to do. Well, addressing these two weaknesses, last mile, that is those excluded, those still excluded, and avoiding the bad consequences of financial inclusion are actually two of the main objectives of our work, of our current work with the Global Partnership for Financial Inclusion, which is actually first to focus more and more on what we call quality financial inclusion. A financial inclusion that actually produces benefits for the final users, that really cares about the final benefits for users, that actually ensures that what is offered on the market is really what consumers, what people need, and not just what financial producers are going to gain from. And the second area of work is identify a measure, a final outcome of financial inclusion, which refers again to the benefits to individuals and micro and small enterprises, in a sense so that we have a final aim, a measurable aim, to make sure that we produce, that what we produce with a greater inclusion is beneficial, and to verify it in a meaningful way. This is the reason why we are focusing more and more on financial well-being, or also financial health, for which we are working with the GPFI on a shared definition, an agreed definition, but also on a conceptual framework that tries to identify what are the determinants of a greater financial well-being, and also a metric to help us measuring it, so that the final objective is to provide countries with tools to verify what are the consequences of financial inclusion and to address them, of course, in a meaningful way. Now, given this work, what does the work produces? What are the conclusions? What are the conditions that favor actually quality financial inclusion? Well, what our work is revealing is that there are a set of conditions that favor quality financial inclusion and hence a greater financial well-being. First, establish quality infrastructures. Given that we are talking mainly about digital financial inclusion, we need basic infrastructure, quality infrastructures. And here we have many examples. For example, digital public infrastructure developed in India or developed in other countries. Second important policy, second important driver is that we have to govern innovation. We know that innovation produces huge benefits, but it might also distribute them in a very unequal, in a very concentrated way. So we have to make sure that innovations are somehow guided, are somehow governed, so that the benefits are actually widely distributed. This means having good regulations, for example. We have many examples around the world, but it means, for example, that when you set up, for example, innovation hubs in your country to favor innovation, you have to ensure that the objective of having shared benefits, of protecting consumers, of having financial inclusion are included in the objectives of innovation hubs, for example. Third pillar, consumer protection. It is absolutely essential, and the Commissioner spoke about it. We are by now all aware that it should be organized around various pillars: good regulations, good laws, effective bank conduct supervision, effective supervision. FSCA is, of course, a great example. effective redress mechanisms at low cost for citizens when something goes wrong in the relationship with intermediaries. And we have many examples, many good practices. The OECD Consumer Protection Task Force is developing them. Fourth, a very important fourth pillar is digital financial education, which needs to complement all the others. And I will say a few more words about it, but it's important to say that we really need a combination of tools. Just one of these is not enough. A few words about the importance of financial education and its role, even if I will be a bit quicker because it will be the topic of the whole conference today. The specific role of financial education, which over time has become more and more needed, relates to the fact that even when we have a good public protection, good consumer protection, it cannot substitute entirely individual choices. Many of these choices are still in the hands of final users. We heard about everyday decisions about spending and saving, how much to insure, how much to invest, which instruments to use. With the effect of liberalization of financial markets, there are many opportunities, but also many challenges. It is also, I would say, a competence for being an active and aware citizens. I would say that today, many facts, many events that are around us have an economic content. And hence, if we're not aware of them, if we don't have an instrument to interpret it, we are citizens who are less aware, in a sense. Now, a few words about the fact that to evaluate situations and to develop policies, we need data to make sure that we know what we are addressing. We have by now quite a large number of data. I just mentioned some of the surveys that are produced with the OECD. The first one is on youth at school, 15 years old. The PISA survey, which shows a wide variation among countries about the level of financial literacy of youth, and which depends on many factors, but basically the main factor driving it is whether or not financial education is compulsory in school. We have a survey regarding adults, again by the OECD, which shows wide variation among OECD and not only OECD countries, with very few countries with high level of financial education of adults. And again, there is wide variation depending on the individual condition, education, age, gender, show differences across countries. And then we have a survey on micro and small enterprises, which is a much more difficult survey. So actually it covers fewer countries, but it shows overall very low levels of financial education, even among enterprises when they are very small. And this, of course, is a problem for the allocation of financial resources. As a whole, we have many analyses showing the role of individual factors, education, income, gender differences across people. Fewer analyses showing the role of institutional, of country factors. As I said, teaching in schools is very important and explains a lot of the differences. The role of social security systems, for example, explains something, but it is difficult to identify very important policy differences across countries, explaining financial education's levels across countries. But we actually have some evidence from our work, in this case with the OECD, with the International Network for Financial Education, that shows some of the good practices, some of the things that actually start to work in increasing financial education. The first one is the importance of reaching a wide audience. Allied with audience, wide audience media, for example, is very important, national TVs or traditional and social media, to offer simple, concrete messages to the whole population. Then the second, as I said, having compulsory teaching in school is very important and matters a lot. Starting from early age is important. Third, especially for the adult population, reaching vulnerable groups. This is very difficult sometimes because they are difficult to reach, difficult to address, and hence we need to ally with many intermediaries, charities, associations, or as Commissioner Kamlana was mentioning, employers, trade unions. Only this way we will manage to reach poor people, women, migrants, elderly, those living in rural areas, disabled people. We have to concentrate a lot on methodologies, on languages, because we need to change the approach depending on the group we are addressing. We need to change messages, but also the way we speak to them. Also, taking into account possibly different behavioral biases that characterize all of us in a sense. And exactly because of this, because it is still complex, we still have a lot to learn and find out when it works, when our programs work. We really need to make sure that we evaluate what we do. So it is important to have impact evaluation initiatives to try and see what works, to use our resources in the most effective way. There are many ways to do it. There are very solid methods. There are also simpler methods, but it is really important that we keep doing it to make sure that we address in an effective way all the challenges that we have. Basically, in conclusion, we have to say that there is still really much to do everywhere in terms of making sure that financial inclusion is a qualitative one and we ensure financial well-being for all. But some indications are emerging. We just need to adjust rapidly to ensure a more just and equal world for everybody. Thank you very much.
Thank you so much, Magda. Thank you for those insights. And I'm sure that a lot of what you've shared with us today is going to feature in some of our panel discussions as we proceed with our deliberations. Let's give her another round of applause.
Thanks a lot.
Thanks so much, Magda. Now on to our first panel discussion for the day. And I must say the title of this next one was particularly interesting to me. Saying I do to consumer education, a long-term commitment. This one reminded me of a story of a couple that was having marital problems and they went for therapy. When they got there, the therapist asked the wife to go first and just to share what her views were. And as she was sharing about all the things she didn't like about her husband, the therapist listened and listened for a while and then suddenly got up, grabbed this wife and gave her a passionate kiss. Thereafter turned to the husband and said, listen, this is what your wife needs 3 times a week. So the husband thinks about this one for a while and says, okay, I can bring her on Mondays and Wednesdays. But on Fridays, I go fishing, so that one is a no-go. So this just underscores that when it comes to commitment, terms and conditions must be very clear up front. And that's what I'm hoping will happen in this next panel discussion. And so I'm going to invite our moderator, Brendon Pearce, who is the CEO of FinMark Trust, to come up along with all your panelists, please, Brendon. In the interest of time, what we'll do is each moderator will introduce the panelists as they are already up on stage, and then they will delve straight into their topic. Thank you very much. If we could please give them a round of applause.
Yeah, I think free seating. Okay. Should be fine. Thank you very much, MC, and good morning Good morning to everybody. Am I audible? Yes, I think I can hear myself. And to my panelists, I'll start with introducing them. Not their whole bio, just the names and the titles. You have it in your program. You can see the long and storied careers that they have. I'll start with Adrian on the far side. Adrian Burke is the CEO of ASISA, Association for Savings and Investments in South Africa. Celiwe Ross is the Director Group Public Affairs, People Cluster and Group Strategy. That's a mouthful from Old Mutual. In the middle, Viviene, next to her, CEO of SAIA. And last but not least, I must get this right now, Lineshree, Moodley, country head stroke CEO of Visa South Africa. I'm not sure which one is right, but she heads up Visa in South Africa. When I got the invitation, MC, I also looked at this I do. The last time I said I do was about 26 years ago. And they told me it's for life until death. Well, it never happens for life anymore. And so I wondered whether this commitment we're making is truly a lifelong commitment. I guess the point from that is financial education, like all education should be, is a lifelong journey. I don't know, it doesn't matter how many degrees you have or how clever you are. The financial sector environment is changing at such a rapid rate that if you think you know it all, you are going to be caught short. So I think that's what I took from that, is that this is a lifelong journey that we have to enter into for financial education. By the way, I do think, and I agree with the previous speaker, that I think we should be talking about financial and digital education because digitization is playing such a critical role in the financial sector that I think that education is important for all the risks that have been mentioned, but also to avoid the digital divide that is happening in the world and in our country as well. The world is excited about AI when we are talking about how do you digitize payments within townships and rural areas in South Africa. So there's these two worlds that are happening, very digitized world and a very underdeveloped world in terms of digital services, digital payments, etc. So digital and financial education. The other key thing I think is when we talk about financial education, and it should be financial and digital education, SMMEs don't feature quite prominently in what we're doing. And because SMMEs, both formal and informal, play such a big and important role in our economy and should be playing a bigger role in our economy, financial and digital education for small businesses is as critical, and we should start factoring that into the work that we do. I'm not going to go through all of the problems. I think the commissioner did a good job in outlining what the key challenges in our country are with vulnerable consumers. At FinMark Trust, we're fortunate to have the FinScope survey that we've done for 20 years in South Africa every year. And in the 2023 survey, we were able to track what's happened in the financial sector with consumers over 20 years. And I can tell you, it doesn't make for pleasant reading in terms of access to financial services, particularly for the poor in South Africa. I won't go through the numbers, but all of the numbers have gone backwards. Non-funeral insurance, medical savings, all of those have gone backwards. The ones that have gone up, unfortunately, is over-indebtedness, funeral insurance. We spend a fortune on funerals. Sorry to be so morbid so early in the morning. We spend over 10 billion rand a year on basically putting it into the ground. And as the commissioner says, if we had to save half of that and use it on more productive spend, we would be making a serious difference. Also, one of the things that stood out for me in the 20-year analysis is in 2013, when we started it, around 13% of people borrowed money to buy food. 2023, it's gone up to 41% of people in South Africa borrow money to buy food every month. Now you juxtapose that with spending more than 10 billion on funerals. There's something seriously missing. I'm not saying we're putting it all on consumers, because we can't. There are supply side issues as well that come into this picture. But that's what we're dealing with. Now, we've been doing financial education for a long time in South Africa. We have policy that is in place. We have the coordinating committee. We have the first video that we showed had lots of institutions doing lots of things around financial education. I read from the Banking Association reports that the banks say they spend, this is around 2018, 153 million rand a year on financial education. That's just the banks that belong to the Banking Association. We haven't even gone to insurance sector and other sectors that I'm sure we're talking about a lot of money. I don't know, I'm not an expert, by the way. These are the experts. But that's a lot of money. There's a lot happening. And my first question to our panel is, what's the problem? Why are we still sitting with such big numbers, so low numbers of financial literacy? What is the problem? So we'll try to establish first with the panel some consensus around what are the issues, what are the problems. I've been warned by the panel this should be a practical discussion, not a theoretical discussion. So we will dive into that first one. Lineshree, I'll start with you. Also in this question, an opportunity for you to say what your institution is doing around financial education. So we'll start with you and we'll go that way.
Sure, thank you.
Thanks, Lineshree.
And thank you for having me on this panel today. I think I'll start with Visa and what it is we're doing, and then
Sure.
I'll cover, some of the challenges, etc. So, at Visa, bringing more people into the digital financial ecosystem is really quite core to our purpose to uplift everyone everywhere. And a core component of that lies in financial education. We know in order to make this digital financial ecosystem work, it is a core component. And over and above that, collaboration is quite key. I think one of the things we've done is we've made a $1 billion investment in Africa last year over the next 5 years. And that means bringing new innovations, new technologies, really strengthening more across the ecosystem, partnerships, scaling our operations, etc. And with that, underpinned is financial education, especially when you look at our country and the continent in which we operate. So I'll talk about it in 3 parts. I think the first one is we haven't quite got collaboration right. And this is one of the key things that we are focusing on. I think through this morning, we've heard a lot about collaboration. And I'll use a few examples of collaboration that we are currently looking at. I think the great example is today's forum that we're at with the FSCA. We started conversations with the FSCA months ago, and we really shared a common vision and a passion. And we know that at the heart of all of this lies in all of us coming together to talk about the importance of financial education. We've also partnered with the FSCE on the financial literacy schools competition. We've done it for a couple of years now. Another key collaboration that we're doing in South Africa is in July. We talk about digital transformation, we talk about technology advancements, but with that also comes increase in fraud. And so with that comes a responsibility to make consumers aware of that. And we brought together various stakeholders from industry, from banks, from fintechs, etc., to talk about what we were seeing in the market and how together we could come together to actually solve for some of the consumer challenges that we were seeing. So collaboration is quite key, and I think we need to get that right. And when we come together, we actually create consumer financial education programs that are impactful, that they are accessible, so they reach the vast majority, and we start to enable broader financial inclusion. And it also ensures that it's not just marketing. We really invested in educating people for the benefit of South Africa, so that you uplift consumers, and at the end of the day, you teach people or you encourage them in terms of how to make healthy financial decisions. I think the second thing is what we're focusing on and what we need to get right is that we need to be data-led. So we invest a lot in research to really understand what a consumer needs, what a business needs, and based on that, put together both programs, but also understand how are you going to reach certain segments. So that's the second one. And then if I think about the third one is, and our commissioner mentioned it in his opening address, was about making financial education a business imperative. If you look at a lot of the things that we do in this market, financial education is actually embedded into it. And I'll use two examples. We're currently running a global program called She's Next, where we're looking at women-owned businesses and how do we empower them to succeed in this environment. And a core component of that program, even though, yes, it's about grant money and mentorship, training is at the heart of it, and specialized training, depending on the business that you're operating. Another example is we know fintechs are vibrant in the South African economy. And we have a fintech accelerator program in Africa. And one of the key components there again is how do we train you to grow your business, to scale that business? So when we look at education, it's consumers, it's small businesses, it's micro businesses, and all of that together, when we come together to collaborate, will actually help improve financial education.
Great, thank you. Thanks, Lineshree. You've solved all the problems. We can go home. Celiwe, next same question.
Thanks, Brendon. So I think it's important maybe to start with Old Mutual, because many of my comments are going to come with that perspective in mind. Mm-hmm. Because whilst financial services is quite broad as a category, insurance is particular, or at least the actuary says so. So let's stick with that as a notion. So Old Mutual is a financial services company. We're a life insurer at heart. That's where our origins are from, and then have broadened into short-term insurance or property and casualty insurance. We're in asset management, a little bit of health insurance in other countries outside of South Africa, and increasingly trying to become a bank. And that puts us in an interesting place, because insurance is still largely sold and not bought. And so unlike my distinguished banking colleagues, where you can interact almost consistently and constantly with consumers, we don't have that same privilege as insurers. None of us woke up this morning to check what our pension fund balance was. And so with that in mind, our ability to be able to interact with consumers is largely driven by the industry that we find ourselves in, and also the products and services that we give to customers and consumers and SMEs. I can talk about that a little bit later. The question was, what has gone wrong? Well, I'd love to anchor on an example that was very public this year. And when I saw the topic around I was like, is everybody going to talk about the social media debacle that we were engrossed in earlier in the year as Old Mutual? And one of the reasons why I think it's so topical is because people buy insurance at a time in their lives when they're anticipating something will happen. Hopefully it doesn't, but it's to protect yourself against the unforeseen. And unfortunately, the unforeseen happens. And what financial education has not, or possibly cannot always take into account, is the emotional state that one is in when they claim versus when they take out a product. A lot of our interventions up until now are actually at inception. So you decide you want to save for something, you want to protect yourself against something, and that's all well and good. But something happens between that time and the time in which you claim, and things have unfortunately gone wrong. And so how do we educate consumers about what happens at claim stage, I believe is an area of focus across the industry. Because unfortunately, you're dealing with consumers who are distressed, who have possibly dealt with death or loss in some way, and need access to money that they believe that they've given to an institution. And so what we do at claim stage is becoming increasingly important. When we're running our own campaigns as Old Mutual, I think the industry is trying to start to have those conversations with consumers around the right way to claim. And a lot of it comes down to documentation. As an industry, we're also subject to a lot of fraud, where people try to get payouts by fraudulent means, where they claim to be beneficiaries that they're not, where people have passed away or not passed away and they try to claim against us. So we are also regulated and need to be able to observe those regulations over time. And that education for consumers around what claiming means and what we need for a successful claim is a big area of focus for ourselves as Old Mutual, and I think for the industry at large. The last thing that I wanted to talk about, well, I'll talk about SMMEs last. I think the second thing I want to talk about is on financial education itself. I'm an engineer by background, and so very passionate about math. And I don't think that you can get financial education right without the basics of mathematical literacy. And so that goes into our education system and into our schooling system. And to our keynote speaker's point earlier, it's got to be dealt with while people are young enough to learn. Even if it's just the basics of how to file your taxes, how to do a budget, how compound interest works. It's a mathematical concept before it is a financial education concept. And getting these concepts into the minds of young people early on, before they join the fiscus as workers, is going to become increasingly important. We've had a lot of focus as Old Mutual in terms of getting into the school system and getting financial education into the schooling system at different areas of intervention, and I must admit with different and varying levels of success. Is something that we can't give up on given where our education system is today. If financial literacy and financial education is what we're after, we have to get the mathematical foundations right in children who either become workers, employers as SMEs, or employees. The last thing that I just wanted to talk about specifically was on SMEs and interventions for SMEs specifically, especially given our country and our continent has very high levels of unemployment. And we as employers can only absorb so many people. We have to, and we have to do our part. And I think everybody in the audience would recognize that SMEs are going to have a particular role in terms of creating more employment, but also contributing into the fiscus. And with that in mind, there's a particular type of education that's required for SMEs because many of those owners themselves are not financially educated or literate, and they can make really irresponsible decisions. Like, for example, financing working capital needs in their businesses by drawing on their mortgages. We see that a lot. We support a lot of small and medium enterprises as Old Mutual, either through a number of ESD funds or through a more popular fund that people would know, which is the Masisizane fund, which was established at a time when we were demutualizing, and a lot of unclaimed benefits have actually gone into supporting SMMEs. But the needs of those SMMEs, beyond actually the money that they need from institutions like ours to finance them, is how to spend their money successfully and how to capitalize their businesses, how to grow sustainably, and how to usher those resources over time. It's a yet untapped space and one that we need to step into.
Thank you very much. I remember the social media furore, and I thought to myself, geez, I'm glad I'm not these guys to deal with that. Thank you very much. Viviene, please go next. Thank you.
Thank you very much. Fortunately, you stole most of my things. So, no, I'm just joking. So, yes, I'm not going to repeat what everybody else says. I think it's fairly obvious. I do want to emphasize the point of what does collaboration mean? And I think you said that you think that this has gone wrong, which I also think. So I think we must think carefully about what does it mean? Is it about sharing who should do what? Is it about defining what's the role of government, the regulators? Is there maybe a role for the CETAs, for example? You know, what's the role of it? The trade association, i.e. the industry, NGOs, the individual companies. So, and I think that that is an area that we need to explore because I think there's a role for everybody. Collaboration doesn't mean just co-funding, you know, on a project. In my view, it should also be, there are lots of benefits around collaboration. Collaboration means making the pot bigger. It can mean that you get more bang for your buck. It can mean that the different partners can have different specializations. So there's a part for general financial literacy. There's a part for, you know, for product-specific information. There's a part for what is, for example, and I skipped the part of who I am. What is the, you know, what is the role and the value that a particular product can bring to you, and when is it going to be useful for you? And how to derive value from it every step of the way, not only at inception stage. What is it in a non-life insurance policy that the terms and conditions that you must remember? You are told that, and you know, sometimes over years you forget, oh, my alarm system is not up to date. At claim stage, these are then become very difficult conversations. So it should be at various touch points, there should be continuous education about specifics. So the example, and just to go back to the beginning, I am from the South African Insurance Association, and from the inception of the Financial Sector Code, with a requirement to spend a portion of your after-tax profits on consumer financial literacy, we at the South African Insurance Association realize that it's potentially going to be more meaningful if we request and or require, mainly encourage our different members, smaller members, specialist members, large members, to contribute to an industry fund that's managed by SAIA. That means that you're pulling a lot of funds. The smaller companies are making a lot of impact through a combined approach, whereas they may not have enough money themselves to make a proper impact. The larger companies may have a lot of money, but if they contribute a portion to that, to the insurance industry fund, that means you can have a different approach to what you are communicating. What is the value of non-life insurance company? What is it? What's the difference between non-life and savings? It's not a savings product. Sometimes you have customers of non-life insurance products saying, but I haven't claimed for 5 years. Where did all my money go? The principle of pooling funds, so that when one day you have a big claim, all the other premiums will help us pay your claim. So it is very fundamental things that I think, and that's why I keep on saying it should be practical. We shouldn't be overly complicated, and it shouldn't be overly theoretical. It should be practical. There is a huge role, and that's why I nodded my head when you were talking about financial literacy, numerical literacy and literacy in general, because one can't really make an impact if those basics are not in place. So I do think that those are basics that the education system in South Africa must really embrace. That also speaks to the skills that we'll need in the future. And as I said before, and I'm probably going to, well, I want to say two more things. There are potentially issues that we need to deal with as a collective, and all of us should add to that conversation, is the training providers that we use. Are they really equipped? Are they registered? Are these people who see opportunities? Because there is money in this game. And I think that there is potentially a need for some other platform in which, or a way in which one can, identify and advertise those providers that can make a difference. And then my last point on what we may have gotten wrong, simply because of how we're actually using it, and that is the requirement in the Financial Sector Code. Because people can throw money at the problem without much impact, because you're going to get your points. And I think the Commissioner mentioned, that it should not be a tick box exercise. And I think, any kind of initiative such as the I Do and the commitment, and it must be a business decision. It must really be a business decision. It is, it doesn't help just to say that. And so I think that it is an opportunity, this requirement in the Financial Sector Code, but we should use it wisely, and we should make an impact. Thank you.
Thank you. Thank you. This point that you make about mathematics, I was reading one of the reports that was saying In fact, over the last 15 years, South Africa, the level of financial education has regressed. And I think it's linked to poor education outcomes. But that's a very worrying one. Thank you very much, Viviene. Adrian, last but not least for this round.
Thanks. And I'm going to use the example of two-pot just as a base because it's a very real challenge that we face at the moment. And the point I want to start with is I think the challenge is not specific to a particular socio-economic group. I think there's a tendency for people to jump to the conclusion that we're talking to the poorer or any particular group. This applies to everybody. The level of financial literacy needs work. Just repeating points that have been made before, but honestly, the foundational basic understanding of financial concepts is missing. I mean, it's the same point, the mathematics, understanding interest, the time value of money, all of those items are missing on a large scale across a huge proportion of the population. And quite honestly, it makes it very difficult to build the next level of understanding of any form when that foundation is missing. So in the absence of that, it is hard work. And to add to that, building foundational elements takes time. I don't know about you, but I'm in the school system, you get taught something, you revise it again, you then do exams, and hopefully you've picked up some of that. You can't build the foundational elements by telling people something once and expecting them to understand it. It just doesn't work. And so that foundation is so critical and it is a missing element at the moment, and I would venture that we've got to make sure that it's not missing going forward. I think the other one, building on a point, there's a lack of scaffolding in the financial education structure because this is not about a once-off. It's actually from childhood through life. Circumstances change, the nature of financial decisions change, and you actually have to keep up with it. It's a learning process, and it needs to be through the whole of life. People's time is precious and concentration spans are short. Okay, we live in a world of boundless information, and people read headlines and not the detail and jump to conclusions, and it makes it very difficult to get attention of people around anything involving financial literacy or financial elements. And the best you can do is give them sound bites of new learnings if your foundation's in place. You can't deliver your foundation through that process. One I think we've just got to be very careful of is transparency comes with a price. Okay, I'm all for transparency, but transparency is about not saying more and more words because the messages get lost in the volume. And I think that is a challenge. The mediums that people engage with have changed. We're no longer dealing with print, perhaps less radio. It's now digital, social media, and new forms forever coming forward. And we have got to use or understand those channels, those mediums, and how to use them if we're going to deliver the appropriate message, and understand that there are costs and barriers associated with those new mediums. Connectivity, the cost of data, the various elements. We've spoken about a lack of consistency and coordination, and I think that's a common thread that we needs to be dealt with. And I think we have to be honest, is there sufficient trust of financial services providers? I mean, for people to listen to us, we need people to trust us. And I think it's one that we've got to acknowledge and not just assume that there is a trust level and people believe us. So coming back to some of the other points, I mean, there's lots to do with the FSC code and making it better. I do think the code has been a positive driver. Whether the impact has been sufficient, we don't know, but I do think it's been a positive driver. There is a great deal of time, effort, and money invested in financial education. Is it as impactful as it should be? No. And it's been said before, we're generally not coordinated or aligned enough. I'm not saying it doesn't exist. I'm saying generally. If we talk from the ASISA position, which is savings and investment, and there's the ASISA Foundation, which is an industry mandated mechanism for coordinated consumer financial education across all provinces, rural and urban, in person, online. And talking to Viviene's point, it's in many instances, it's where, say, smaller companies can't make an impact in their own right, but it's an opportunity for them to invest funds for impact. ASISA's put together Smart About Money, which is a website which is brand agnostic. It gives no product detail. It is intended to be a single source of truth. And I think that's one of the things that we need to investigate. Is there possibility somewhere for certain things of having a single source of truth? And the ASISA Academy is a service provider for specific delivery of services. And there are collaborations and partnerships that work. Working with BATSETA, with the Financial Planning Institute, with the FSCA. So there are examples of partnerships and collaboration. It is not at the level that is required to make the difference that we need.
Thank you very much, Adrian. I've been told it's now 12 minutes, right? I'm sure left. There's so many issues that you've raised that I would love to delve into, but I think in the interest of time, I think the issue around coordination seems to be one that's popping up all over. And I want to distinguish coordination from collaboration, although the one fits into the other. And I assume we're talking about coordination nationally with all stakeholders. And I was even thinking maybe we should have a health pact like the health sector without the controversy that went down, but involving all stakeholders in something like that. So if I can just give you 1 minute each to focus on what do we need to have in place for better coordination, and I'm assuming we're going beyond just the private sector, but also other sectors of the state. Adrian, we'll start with you this time and come this way. So 1 minute though. We still need to go to the audience. Yeah.
I'm going to make one point in that. I'm not going to try to answer the whole question. I think we need to find a level of coordination that delivers education at a time when people want and need the education. Okay. You can't do a shotgun approach. There's no silver bullet. It's got to be a teachable moments when they're burning platforms and in a manner that resonates with people, whether it's home language or other entities. And that, I think, can only be done on a coordinated basis. And
okay. Viviene, what do we need to have in place for this coordination?
I think we need structure and a platform to share.
Mm-hmm.
And we've been thinking about the role of government, the role of this one, that one, and that one. And I think that is where maybe National Treasury and or the FSCA can assist. Creation of a common platform in which can become the go-to for financial literacy information. And I think that something like that should at first be, and this would be great if it comes from a neutral party such as the FSCA, for example, scoping the financial sector, because this is already a very difficult landscape to manage for people who don't really know. What does the banks do? What do you get from the non-life insurance? What's the value of what, why is savings important, etc. And who's who in the zoo? And then all those who are involved in consumer education, potentially sharing their learnings, sharing the initiatives on there, sharing an invitation for somebody, we are doing this program, would you be interested in, that kind of thing, including, for example, potentially who are the service providers for this, that, and the other initiative, and maybe creating some sort of system in terms of, what do you need to have being a training provider for consumer financial literacy. But I do want to just have one caveat, and that is that it should not be too prescriptive, because the media plays a big role. And I mean, the SAIA Consumer Education Fund has a lot of impact through our radio interviews in all the vernaculars all over the country. People ask questions. You can see the interest in insurance growing there, etc. That's not going to be a registered training provider. It's a medium that we are using. We're using experts in the industry. So I think, in a nutshell, that's potentially something that we can go to, which can organize things and find a place for everybody to fit in. Thank you.
Celiwe, next.
I'm going to keep it short. I agree with both the previous panelists. I think oftentimes when we speak about coordination or collaboration, people tend to want to make it all the same. Oneness isn't sameness, but you have to find, I think, the areas where any one particular party is more impactful, the things that make sense to club together, and leave certain entities to have the uniqueness to be able to do what they need to do. I think, to Adrian's point, what's going to become critically important is understanding the way that people learn and are going to learn going forward, given the amount of information that there is. We've got a proliferation of information, of programs, and dare I say money, that's been thrown at the same problem, and we're all questioning whether it's been impactful. And I think we're going to have to start to understand how we get that to people in the way that they consume it best and where they're at, whether someone is rural or pre-retired versus someone who's young and peri-urban, and how that frequency of education happens to meet them at their time of need.
Okay, thanks. Lineshree?
All right, I'll also try and keep it short. I agree with the previous 3 points. I think what I'd like to add is, in order for us to be impactful, we need to have tailor-made training programs. And in order to do that, we need to invest in understanding data. We need to invest in understanding what consumers want and put together programs and facilitate it through mediums where they are receptive. Because if there's no adoption, we're not really creating the impact. So I would say be data-led, understand what the consumer needs. And again, to your point, there's not a one-size-fits-all. Dependent on what you understand, you tailor-make the trainings and the platforms in which you reach people.
Great, thank you very much. We started off from that side saying it's coordination is the big thing, but actually it's not just coordination. It's also the issue about quality of delivery, timing of delivery, and then the issues about the fundamentals that need to be in place to understand very complex. When you talked about that, you made me feel inadequate. I thought I understood the financial sector, but when you talked, I thought, geez, maybe I should go back as well and learn again. But thank you very much. We're gonna, for the last period, just throw open any questions, comments from the audience. We have many CEOs here. Lungisa, you're right in my line here. Any comments from any of you? Just put your hand up. Someone is pointing somewhere. No? There's a question, a comment. There's the mic there. Thank you.
No, thank you. So I just wanted to add to what the panelists have already said, and because some of the challenges that we identified is around, are we actually seeing the impact, to know the impact? So I think there needs to be some form of impact measurement, understanding a coordinated effort, theory of change. what is it that we are trying to get to? What are the challenges? What are the inputs? What are the activities? What are the outputs and the impact? So I think there needs to be a coordinated effort where at a national level, we understand what it is that we are trying to achieve, and then put in place the activities, coordinate towards achieving that same goal.
Great, thanks. Kathy, yeah, and then we've got a hand at the back. Let's start at the back there. I was going to say with the black and white shirt, but Kathy also has one.
Thank you very much. Yeah, my question talks about the charter. So obviously we do endorse and agree that the charter covers the need, and that's a high need. But the charter also leaves almost the exclusion. So there's a lot of people that has massive financial education needs that is underserviced because they fall outside the scope of the charter. So do we see the charter being expanded, or a world post the charter, or what is our do to those that are being excluded due to the charter? Thank you.
So if there are no other questions, maybe just to, sorry, Diane, there is a question or comment. You don't have to ask a question.
Thank you. Yes, it's not a question, it's a comment. And my comment comes out of a place from a previous life where I was really involved in consumers who are over indebted, thousands of them getting debt rearrangements agreements per month through the courts, through the consumer tribunal. Those people are in serious financial distress. Now, the 5 years that they're under debt review is a period of rehabilitation. Now, what is happening is a whole structure had been created of debt counseling. But what is happening in that space is that the debt counselors are actually only debt review practitioners. The only thing they do is restructure people's debt so that they can pay off the debt. Now, those very people, after the 5 years, won't be rehabilitated. Or is there a measure through which there can be a process through which actual counseling and consumer education, financial education, budgeting, all of those can happen with a huge captive group of people whom everybody know who they are. Every financial institution have people under debt review. Can something be done in coordination with a credit regulator, for example, or other regulated entities like debt counselors, where their hands can be held into your point of coordination and collaboration, Brendon, where really those people can be helped. And there's a perfect measure there. You can see if this process in the 5 years is effective and it works, you will see how many people will fall back into bad practices around their finances. So I'd really like to ask and say, there is a real need to help those people who are already drowning. We are talking about educating people before they even enter the market. We're talking about the schools. Then we are talking about people who are in the market who are not yet in trouble. But then there's a huge portion of people who are in trouble and who needs help and who's actually, for all intents and purposes, a captive market. That is my comment. Thank you.
Thank you very much, Diane. I think the point you make reminds me of the OECD guidelines on financial education policies about having focus on particular groups. So for example, SASA grant recipients would be a group like that needs specific focus, as well as people that are over indebted. We have about 4 minutes left. I have a hand at the back and a second one there. I think that will be it. And a third one. So 3, and then I think we're gonna wrap up the session. We'll start with the lady in pink there.
Thanks, I have the mic, so I'll go first. I'll make it quick. My name is Hayley Perry. I'm from Worth. I'm one of the financial education providers doing this kind of stuff. And when we're talking about how do we collaborate and put together something, I think speaking to Adrian's comments around attention is short and time is precious and we need to meet people where they're at, I think there's an opportunity if we add in some fun and we add in some rewards. We've seen a lot of success when we simply reward people for doing something that, let's be honest, it might be more fun to watch something on TikTok or Netflix than to invest in your own financial education. But if there's just a little bit of a carrot, whether it's, you know, Vitality Money points for completing a course or whatever it is, these things matter and it does help us change behavior as we provide financial education. Thank you.
Thank you. Teachable moments. This next.
Thank you very much. Good morning. Maudi Lenzon is my name. I think a very interesting conversation this morning, but I think, you know, just to one of the other factors that I've noted personally, you know, working through the sector, is that there's certainly a clear lack of trust between the consumers and the financial institutions themselves. And that lack of trust, one observed, it became quite prevalent, you know, since the financial crisis of 2008. COVID-19 has not made things better. I think it's even gotten worse after that, where consumers, whether it be, you know, in retirement products, you know, closer to their retirements, they learn that, you know, those products have not performed well, you know, and therefore they've become poorer. So one is the performance of these products that are supposed to be really working for the consumers. Number two is also the adoption, and I think the industry has started to move in that direction where they're adopting this machines that are doing pricing, where suddenly your premium is this much and nobody can explain why your premium is this much because they put it into the system and that's what the system gave you. Reliance on machines, even though there's not a clear framework of how to regulate those machines, that is further worsening the trust between the financial institutions and the consumers. So my question will be, are we ready for this machines adoption? And if we are, how are we ensuring that they're not, I think Magda mentioned discriminations, because I think that's the area where most of the discrimination happens and nobody's accountable there. How do we hold the machines accountable for such actions? Thank you.
Thank you very much. I think you've raised a topic that needs a summit on its own around AI. I'm not sure we're going to answer that now. Yeah, but we have one last question, and then I think we're wrapping up. Yeah.
Yes. Hi. Good morning, everyone. My name is Ofente. I'm a founder of a financial literacy education program targeting school kids from grade R to 12. Focusing at low-income areas and townships, to be specifically. And my comment is, it's amazing, I mean, the amount of knowledge and information in this room. And we've been doing this work since 2017 informally, only registering this year. And it's amazing that there's this information. Where have you guys been? Why has this information not trickled down to us at the township? So I've been asked the question, why are you packaging financial literacy education in a form of a stage play? And I say always that it will take someone from me who grew up in a township to teach township people about financial literacy using concepts that appeal to them and addressing the challenges that they face at the township level. So yes, I'm here for the collaborations. Please, those platforms you're talking of, putting up in place where we share information. I'm just here to say, I'm here. Let's collaborate, please. Thank you.
We see you. We see you. My neighbor where I was sitting had a question. I'm going to take liberties. 1 minute, and then we can close.
Thank you so much. I'm Ruth Benjamin Swales from the ASISA Foundation. I think the point that is really weighing heavily on me is that we're having these interesting conversations and most of us are quite informed, and it's all about financial education. But to the point about coordination, I think we need to first acknowledge that our financial literacy is a crisis in our country, and there are many factors impacting that crisis. And we need to stop adopting a view that where consumer financial education is treating the symptom. We need to understand and coordinate, and my view is it needs to become an issue under the presidency. What are the factors that give rise to this financial literacy crisis? So obviously, I think the one we're talking about today is the issue of the need for it to be integrated into our schooling system. Without that, we really are just going to be treating symptoms. But there are other issues, like when the National Credit Act is formulated and the levels of credit that gets made available to people who actually shouldn't be able to have that level of credit because of the irresponsible behavior it leads to, that causes a problem that we now have to go and address through our financial education. But we are just treating a symptom. We need to get to those root causes. Another pressing need, which hasn't come up yet, is the extent to which gambling and access to substance abuse, so lifestyle choices, is broad. But the reality in South Africa is that gambling is a major issue and becoming more prevalent through digital platforms, but just allowed within our society. So it's societal issues that needs coordination and collaboration at a much higher level. And we then have to continue to go, everything we're talking about here is relevant, but until that coordination happens at that high level for our country's sake, we are really just treating symptoms.
Thank you very much. We've come to the end of the session. You've left me with the tough task to try and summarize the conversation. But I think the point is there are a number of key aspects that have jumped out during the conversation that require more engagement. Coordination is one, the quality of delivery, the timing of delivery, and the issue about integrating it into the basic education system, as well as having clear target focus groups within our strategy so that we can focus in on them. It's not time to slit our wrists, I don't think. The whole world is grappling with the same issues, and financial education is probably one of the most complex things to measure and to understand the impact. I suspect it's one of those things you just have to keep investing in and having a conversation about how to make it better. I'm not sure you'll ever arrive at a destination. I suspect financial education is one of those things that need to happen. Thank you very much. Please give our panel a round of applause.
Oh, I think we can do better than that. Another round of applause, please. Thanks so much to the panel. Thank you so much, Brendon. Such great insights, so many nice ideas. I particularly like the one around, making the content interesting, because sometimes we forget, as people that are providers of these services and, some of the products, that we are also consumers of the same. So we've got to make sure that it's stuff that we also would like to connect with before we push it out to the rest of the consumers. Thank you so much for that. We are going to take a short break and we will be back, please, at 10:40. 10:40, that gives us 10 minutes. It's a comfort break. It's a quick bite, and then we're back. Thank you so much.
Consumer education is important because it ensures FirstRand is compliant with the BEE legislation and supports the transformation agenda in the country. And our intent, our focus, our passion is on improving the financial literacy levels of South Africans.
We currently run long format workshops. There are more than 3,000 sessions across the regions, where we reach in the region of 50,000 consumers every year.
The aim is to educate
everyone. We use different tools. We have different activities, different role plays, different videos, and we also make use of virtual aids. We run above-the-line campaigns. We are live on community, national, and regional radio. But we also do a lot of work on the digital and social media platforms as well.
The benefits of the work that we do in consumer ed is widespread.
On a daily basis, we impact people's lives. Never give up and never doubt the power within.
What is phishing and how to avoid the bait? Phishing is one of the most common ways to steal personal data. Usually, an email or a message is sent to the account holder to get them to click on a link and enter sensitive personal information. The criminal can then intercept the card or account details in order to buy goods. Sometimes criminals contact the victim for an OTP, which the client usually gives away unknowingly. Learn how to identify a phishing message. Be wary of requests for urgent action or threats. Verify requests from first-time or infrequent senders. Spelling and bad grammar are sometimes an indication of a scam message. Generic emails that aren't personalized might be a warning of a scam. Mismatched email address domains and website domains are often a good indicator that the message is a phishing message. Suspicious links and unexpected attachments should never be clicked on and are a good indicator that the message is a scam.
Consumer education is important because it ensures FirstRand is compliant with the BEE legislation and supports the transformation agenda in the country. And our intent, our focus, our passion is on improving the financial literacy levels of South Africans.
We currently run long format workshops.
There are more than 3,000 sessions across the regions,
where we reach in the region of 50,000 consumers every year.
The aim is to educate anyone.
We use different tools. We have different activities, different role plays, different videos, and we also make use of virtual aids. We run above the line campaigns. We are live on community, national, and regional radio. But we also do a lot of work on the digital and social media platforms as well.
The benefits of the work that we do in consumer ed is widespread.
On a daily basis, we impact people's lives.
Never give up and never doubt the power within.
Consumer education is important because it ensures First Rand is compliant with the BEE legislation and supports the transformation agenda in the country. And our intent, our focus, our passion is on improving the financial literacy levels of South Africans.
We currently run long format workshops.
There are more than 3,000 sessions across the regions,
where we reach in the region of 50,000 consumers every year.
The aim is to educate anyone.
We use different tools. We have different activities, different role plays, different videos, and we also make use of virtual aids. We run above the line campaigns. We are live on community, national, and regional radio. But we also do a lot of work on the digital and social media platforms as well.
The benefits of the work that we do in consumer ed is widespread.
On a daily basis, we impact people's lives.
Never give up and never doubt the power within.
What is phishing and how to avoid the bait? Phishing is one of the most common ways to steal personal data. Usually, an email or a message is sent to the account holder to get them to click on a link and enter sensitive personal information. The criminal can then intercept the card or account details in order to buy goods. Sometimes criminals contact the victim for an OTP, which the client usually gives away unknowingly. Learn how to identify a phishing message. Be wary of requests for urgent action or threats. Verify requests from first-time or infrequent senders. Spelling and bad grammar are sometimes an indication of a scam message. Generic emails that aren't personalized might be a warning of a scam. Mismatched email address domains and website domains are often a good indicator that the message is a phishing message. Suspicious links and unexpected attachments should never be clicked on and are a good indicator that the message is a scam.
Consumer education is important because it ensures FirstRand is compliant with the BEE legislation and supports the transformation agenda in the country. And our intent, our focus, our passion is on improving the financial literacy levels of South Africans.
We currently run long-format workshops.
There are more than 3,000 sessions across the regions,
where we reach in the region of 50,000 consumers every year.
The aim is to educate anyone.
We use different tools. We have different activities, different role plays, different videos, and we also make use of virtual aids. We run above-the-line campaigns. We are live on community, national, and regional radio. But we also do a lot of work on the digital and social media platforms as well.
The benefits of the work that we do in consumer ed is widespread.
On a daily basis, we impact people's lives.
Never give up and never doubt the power within.
What is phishing and how to avoid the bait? Phishing is one of the most common ways to steal personal data. Usually, an email or a message is sent to the account holder to get them to click on a link and enter sensitive personal information. The criminal can then intercept the card or account details in order to buy goods. Sometimes criminals contact the victim for an OTP, which the client usually gives away unknowingly. Learn how to identify a phishing message. Be wary of requests for urgent action or threats. Verify requests from first-time or infrequent senders. Spelling and bad grammar are sometimes an indication of a scam message. Generic emails that aren't personalized might be a warning of a scam. Mismatched email address domains and website domains are often a good indicator that the message is a phishing message. Suspicious links and unexpected attachments should never be clicked on and are a good indicator that the message is a scam.
Consumer education is important because it ensures FirstRand is compliant with the BEE legislation and supports the transformation agenda in the country. And our intent, our focus, our passion is on improving the financial literacy levels of South Africans.
We currently run long-format workshops. There are more than 3,000 sessions across the regions, where we reach in the region of 50,000 consumers every year. The aim is to educate anyone. We use different tools. We have different activities, different role plays, different videos, and we also make use of virtual aids. We run above-the-line campaigns. We are live on community, national, and regional radio, but we also do a lot of work on the digital and social media platforms as well.
The benefits of the work that we do in consumer ed is widespread.
On a daily basis, we impact people's lives.
Never give up and never doubt the power within.
Thank you. If we could please take our seats. Right, we continue with our program, and up next we talk about financial literacy at schools. Now, Mzikayise Masango, this is one I'm particularly going to be taking furious notes in this session, because I've also been trying to do my bit for financial literacy at home with my children. And anybody that's tried to do that with kids knows that it's not the easiest of tasks. I lost the battle quite early, I must admit. When my son was about 6 years old, we'd gone out And of course, like all children do, he wanted everything under the sun. And I remember saying to him, I don't have any money anymore for all of this. And he very gently took my hand and said, come, Mama, and walked me to the nearest ATM and said, ask this thing will give you money. So that's when I knew I'd lost and I need help. And so I will be listening intently as you speak. And Mr. Masango is the Chief Education Specialist at the Department of Basic Education, talking to us about teaching financial literacy at schools, from budgeting to investments. Please, can we welcome him to the podium?
Good morning, ladies and gentlemen. Program Director, I share your frustrations in bringing people from break. It is what we contend with every day. At least you're doing it once. Colleagues, I am representing the Department of Basic Education. Unfortunately, our DG could not make it, and he deployed myself and a colleague of mine, Ms. Bernard Pera, at the back there, who is a specialist for life orientation. I'm mentioning her precisely because later on, life orientation would be the subject that will be driving financial literacy education in our schools. I don't have much time. Let me start. Presentation outline, I will look at the shape and size of the education sector briefly. I will look at the National Development Plan with respect to the goal on education, the aims and objectives of our curriculum. I'll touch on that briefly as well. And I will talk to the current status of financial education in the current curriculum, and also the future plans with regard to the process that we are banking upon of curriculum strengthening. And then I will also try to manage the expectations of us in relation of what is possible and what is not possible within the education sector. And then I will also talk to a few other collaborations or avenues that may be explored to promote financial literacy in school. Colleagues, we are a very huge sector. We have more than 12 million learners, which means actually that we have a client in almost every household. Therefore, if we teach, that person will have reached every household. We have more than 400 educators. We have 75 districts in the 9 provinces. The NDP actually articulates our objective or our goal as the education department. We intend to provide education of the highest quality, leading to significant improved learning outcomes when our learners participate in international standardized tests. So that is the main goal that we are driving towards by 2030. But in our curriculum, we have a number of objectives. We have what we call an envisaged learner, the type of learner that we want to produce. There are many aims and objectives, but I decided to uplift only 3 that are pertinent to the matter at hand. We want to have learners who are able to collect, analyze, and critically evaluate information. We want to identify learners who are able to identify and solve problems using creative and critical thinking. And most importantly, we want learners who are able to organize and manage themselves and their activities in a responsible and effective manner. That will include managing their financial affairs. So in essence, we are saying we want learners who don't just consume information, but who are able to critically evaluate the information. For example, in languages, all languages that learners do at school, either at home language level or at first additional language level, there is an aspect where they study evaluating an advertisement. So from that, they'll become very discerning consumers because they are able to properly analyze and evaluate an advertisement. Colleagues, contrary to popular belief, consumer or financial literacy is covered in our curriculum. I've heard many speakers here alluding to the role that the basic education sector should play in financial literacy. But currently, there is financial consumer education in our curriculum. It is only the extent, the varying extent at which it is covered in different phases and in different subjects. So the challenge is that there's no clear progression of skills, and you later see that there is some level of duplication. So there is no proper alignment between subjects. And that is caused by the fact that learners choose certain subjects. So the duplication sometimes is unavoidable because there are compulsory subjects, then there are optional subjects. So a learner might choose one or two subjects, and in those subjects, they might be loaded with financial literacy. But a learner who chooses to do the natural sciences would get very little financial literacy currently, which is what we intend to deal with going forward. In the GET phase, which covers grade 7 to 9, consumer education is found in a subject called EMS, Education and Management Sciences. In the FET phase, which is from your grade 10 to 12, it is covered in choice or optional subjects, mainly in business studies, accounting, economics, mathematical literacy, consumer studies, tourism, and to a certain extent, life orientation. Right. EMS is done by all learners. It is compulsory at that level. It is a subject that actually prepares learners for accounting, business studies, and economics in the FET. But we are saying even those learners who are going to other streams, like your history and geography, like your physics, maths, and life sciences, then they must at least get some taste of EMS, of financial literacy. They deal with budgeting, banking, savings, and investment. But unfortunately, the greater portion of time is spent on bookkeeping because they are training them for accounting in the FET phase. Of course, they do some entrepreneurship, business plans, the difference between needs and wants, which is very important, starting your business and so on. And then we have the part of the economy where they deal with savings, the role of banks, services offered by banks, how to open a bank account, and community saving schemes like your stokvels, which are very popular. Right. Then we have a business studies, which is done by about 40% of learners in the FET phase. It is a choice subject. There, they cover different legislation, your Labor Relations Act, Employment Equity Act, Basic Conditions of Employment Act, your QUEDA, your BBBEE, your National Credit Act, and your Consumer Protection Act. So a learner who emerges from that subject would actually have knowledge of the consumer rights as contained in the National Credit Act and the Consumer Protection Act. They also look at investments, the functions of the Johannesburg Stock Exchange, types of investment opportunities, your fixed deposit, your retail, government retail bonds, types of shares. They also deal with calculation of interest, either compound or simple. I hear some of the speakers talking about the mathematics underpinning financial literacy. So there is an attempt to address that. In accounting, learners are exposed to analysis and interpretation of financial statements, where they analyze the published financial statements of companies, where they look on your return on investment, your risk and gearing, profitability, liquidity, and compare between partners and decide in which company they are likely to invest based on the financial indicators. They also cover value-added tax, terms of inclusive, exclusive. They cover budgeting, and then also ethics, including corporate governance. Right. Under salaries and wages, they look at types of deductions, which will include your personal income tax, your medical aid, UIF, and all that, in order to move from gross salary to net salary. In economics, deal with scarcity problem, the tension between needs and wants, and the choices that we have to make as consumers. The role of money in the economy, someone talked about the purchasing power of money, which they deal with the value of money. We deal with banking, we deal with the role of the central bank, the South African Reserve Bank, in terms of monetary policy. We deal with the role of government in the economy in terms of fiscal policy, your taxes, your subsidies, your grants, etc. Inflation, foreign exchange markets. You see also the legislation as it impacts on the labor rights. That is the duplication that we are talking about. Mathematical literacy. This is the subject that is done by almost 60% of the learners, because learners in the FET phase have to choose between pure maths, those who are attending technical schools do technical maths, and there is also mathematical literacy. The bulk of our learners are actually doing mathematical literacy. And then here there is a whole main topic on finance, and it deals with all those issues as covered. Financial documents, how to interpret the household bills, the telephone bill, the municipal bill, the bank statements, how to read and interpret them. Tariff systems, in terms of if I have 100 rands and a kilowatt of electricity is so much, how many kilowatts I'm going to get when I buy from Eskom, and all that. They deal with loans and interest. And importantly, they deal with higher purchase, residual and balloon payments. One of the members of the audience alluded to the fact that people get credit easily. Nowadays, you are able to buy a R1 million car, and then you finance it over 72 months, after which, and you only pay 60%. Then you refinance the 40% for the next 5 years, which means actually you are spending 10 years paying a car. So the role that we also play as financial institutions is very important. The issue about balloon payments is there. Taxation, personal income tax, value-added tax, banking, loans, investment, insurance plans. Different insurance plans are covered. Inflation rate, the decrease or increase the buying power of money. Learners are also exposed to that. Exchange rates, also the value of the rand compared to other major currencies, and what happens when the rand loses its purchasing power. And they also deal, of course, with budgets. Colleagues, then we have consumer studies, also household budgets, banking, trade transaction, consumer protection, consumer rights, contracts, interest rates, taxation, inflation, entrepreneurship, duplication. Also a small subject, but it's becoming very big now. Many learners are starting to do that. Tourism, also that. foreign exchange, interpret a currency rate sheet, conversion of major currencies, car rentals, the cost of renting a car, vis-a-vis owning your own car, compiling a tour budget, forms of payment when traveling abroad. Must I also add that life orientation also currently, they deal with those labor rights, they deal with corruption, they deal with fraud, they deal with embezzlement, just to try also to look at the ethical side of things. Right, going forward, that is what was happening there, what is currently obtaining. Currently, the department has embarked on the process of curriculum strengthening, where we are sort of bringing some changes into the current curriculum with an intention to implement it in 2026. We have started to work this year, we'll be working next year, and then we'll be completing in 2026. Amongst that, what we are doing there, we are strengthening, we are modernizing the subject by, for example, introducing new subject, but what is key is content modernization. We are reviewing, updating, trimming, and strengthening content in existing subject. So some of you whose content we are covering in this subject, as shown in the previous slide, we may be approaching you to say, the content that we have is old, many changes have happened since we wrote this curriculum. Can you give us new content and train our educators on this? But we're also going to use content modernization to infuse more financial literacy in life orientation curriculum, because life orientation is being done by all learners. It is a compulsory subject. We start from grade R to grade 6 as life skills, from grade 7. We in the senior phase and FET is called the life orientation. So, which means in future, each and every learner, irrespective of which subject choices they are making, would be exposed to some form of consumer education. 1 or 2 weeks per week will be per annum will be allocated to a particular theme or topic in life orientation on financial education. And I've made an example there. And this will be over and above what learners are exposed to in EMS and other optional subjects. So we want to provide financial education that will impact the financial decisions of learners and prepare them for when they go to the world of work. And this shows some of the areas that we are considering for inclusion in our life orientation curriculum going forward. We have not yet decided on the correct content mapping. And then we are working with the National Consumer Financial Education Committee to make a joint submission in terms of what is it that they need us to cover. But I said what they need us to cover, but the fact of the matter is that we cannot accommodate everything on financial literacy in our curriculum because of competing interests. There are other core content, skills, and competencies in the different subject disciplines that we must cover to prepare learners for university and the world of work. For an example, life orientation as a subject doesn't have the same number of hours per week as other core subjects. And also, there are many demands besides financial literacy education that are made on the life orientation. They cover career guidance, physical education to deal with obesity, bullying, teenage pregnancy, inclusivity in relation to racial and gender discrimination, sexuality education, and many more people are coming with other demands for inclusion in the life orientation curriculum. Therefore, we are saying, given the above limitation, if a particular content on financial education is not covered in any of the subjects or in the life orientation. There are other ways or avenues that can be explored, mainly through competitions in schools. I heard the lady, the representative from Old Mutual, also referred to the competitions that they are running. We are running a competition with the Reserve Bank on the Monetary Policy Committee. We are running a competition with the JSE. We are running a competition with the FSCA. We are running a competition with Allen Gray. And there are many other competitions that are being run in the various provincial education departments. Colleagues, thank you very much. The program director is on my case. Thank you.
Thank you so much, Futhi. I tried to be less on your case, but as you can see, we have run over time-wise a little bit. And so for those that need to manage their diaries, we will likely take a little bit of time over 12, if you don't mind. But we have 2 more panel discussions, very critical discussions to have this morning. And so just also to mention that this summit is happening right in the middle of Money Smart Week 2024. And a lot of what we are discussing here today is actually spilling over into what we are doing in practice as a collaborative effort between all of the stakeholders that are involved in that project. So that's a very good thing to note as we talk about educating youngsters. It's now time for us to have a fireside chat. I love the sound of that because it makes me think of marshmallows and coffee and a fire, an actual fire. So I'm going to invite Maya Fisher-French, who is the moderator for the next panel. And if you could please, Maya, come up with your panelists as well. And we'll do exactly as we did in the previous panel, where you will introduce all of your panelists. Maya is a consumer journalist. She's an editor, she's an author, and she is a champion really of consumer rights, and consumer education is very, very key in the work that she does. Ladies and gentlemen, let's give them a round of applause.
Well, thank you very much. It's actually a huge privilege to be able to convene this panel and be able to really talk at a CEO level about financial education, which of course is like a burning passion of mine. You know, as a financial consumer journalist, I deal with South Africans every single day. And it still shocks me how low financial literacy is. And by the way, this is across all income brackets. I think Adrian alluded to that earlier. This is not just about people from poor backgrounds, not understanding things like what does credit cost, basic investments, basic savings accounts. And please, don't even start on the two-part retirement system. That has been to me even a bigger shock, just how people don't understand these concepts. And the other thing that I really come across is that the idea of saving for a goal, a short-term goal, is not on anyone's radar. In fact, it isn't even really part of their thought process. I was having a discussion with a young woman who's got herself into a lot of debt. I have a lot of these discussions. And she told me her story. And her story was that she was the first in her family to graduate. But well, I mean, she earns a good salary. She was still living at home and she had quite a lot of disposable income. But she didn't know what to do with the disposable income because her family had never been in a position of having disposable income before. So she went to the bank. And the bank offered her a 50,000 Rand credit facility. And she said to me, Maya, I genuinely thought that was a good use of my disposable income because I'd get the 50 and then I would pay it on the monthly. I could afford it, right? And she said to me, it had never occurred to her to save towards a TV or a couch. It was just not part of her frame of reference. And I mean, let alone, of course, an emergency fund or any of those things that we try and get people to do. And I think this is why we have a financial crisis in South Africa. The lowest savings rate in history, it's now negative. We have research suggesting that the average middle class household is now spending about 60% of their income on paying debt. And as we discussed earlier, debt counseling companies are rife. And from the financial industry perspective, this is not good news, right? Because a financially educated consumer is a financially sustainable consumer. So what is the role that service providers have in improving financial literacy? And that's really the discussion for today and what we're going to discuss with our three panelists. And to introduce them, I have Mary Vilakazi, who is the CEO of FirstRand, also a board member of BASA, Hylton Kellner, who is CEO of Discovery Bank, and then, of course, we have Mzikayise Fuzile, who, of course, he was CEO of Standard Bank, but also brings, I think, a little bit of his insights as former DG at National Treasury. So welcome to the three of you. And I thought just to frame the conversation a little bit, we've got the conduct, the draft conduct standard for financial education coming out. We're going to be discussing it a little bit later today. But I just thought it'd be worthwhile reflecting a little bit on what the requirements are going to be. It must enable natural persons and small businesses to make more informed decisions about their financial, their finances and financial health. The delivery platform must be appropriate. They must be brand agnostic and not used as a marketing campaign. It must ensure that the virtual platform is appropriate. The outcomes of financial education initiatives must be measurable and demonstrate effectiveness and impact. And it must encourage positive customer behavior, influence behavioral change, and contribute to long-term skills development. So my starting question, and it's a good question for each of you are going to answer succinctly and quickly. I'm under huge time pressure. I'm being singled out. What does financial literacy look like to you as a financial institution, Mary?
Thanks for that question and introduction, and thank you for having us as the FSCA. And congratulations on this work that you are advancing and putting forward, because I do think it's important. I think this is not a space where, as individual financial institutions, you want to get the limelight for the work you do yourself, because I think as a collective, the need is big. So I certainly welcome it from my perspective. I mean, financial literacy at a personal level, I think it's gaining skills and knowledge that allow you to make informed choices and decisions around products that you ultimately take or don't take, use or don't use. And I think when we get that right, it will be reflected in what you're talking about, the savings levels of the nation. Because I think the decisions around debt or not debt ultimately go back to your own balance sheet and what you're trying to achieve. So very much aligned to what we do as banks. And for me, it is about making sure that customers or consumers or customers or clients that take up products with us, the reason why it matters is that I need to know that they got the product and the solution that is appropriate for their own personal circumstances. So I think it's a long way of just saying there is actually alignment between what you try and do as a business and I think what individuals that we serve are trying to also achieve.
Hylton?
So I think maybe just to follow on, I think Mary's comments, and just to once again, I think thank you for the invitation, and I think the congratulations to the FSCA in particular for facilitating this and taking initiative in many respects. And I think if you think about financial literacy, for us as an organization, Discovery has been built on a purpose of making people healthier. And in the financial context, it's financial health. And so we think about three key areas that manifests: education and awareness. Can we educate our clients around what being financially healthier is, and also making them aware of the risks associated with various products and those behaviors. Secondly, can we positively nudge clients in the right direction, create the right kind of financial incentives for the right behaviors? And it's something that's core to everything that I think we've done as an organization, and what we try to do to align the bank and Discovery more broadly with our clients. And if we get it right, it's a win-win. It's kind of the incentives that are good for our clients are good for us, and that's what financial literacy and financial health then are completely aligned with us as an organization. And then thirdly, protection. Actually protecting the consumer against making the wrong decision. So providing a safety net. So incentives for positive behavior, awareness around what the right product and the right kind of behaviors are for the client, but then protecting them against the wrong decisions at that time. And as you say, all highly relevant in the context in which we operate in South Africa, with high levels of indebtedness, a two-part system that's coming to the fore, which is kind of an opportunity on one hand for real financial health, but on the other hand, a real risk that we kind of just continue in our consumption culture and in fact exacerbate it. So I think a highly relevant topic, and that's the way we think about it.
I love the point, protecting them from making bad decisions, because sometimes it's not so much, it's the bad decision that really unravels everything. Mzikayise, your insight?
Yes, thanks, Maya. In addition to the points that have been made by the fellow panelists here that I agree with, to us, financial education is about its foundations, about the fact that we as financial institutions have got vast information and knowledge about consumers, the good things that they can do, the bad things, the mistakes that they can make, because we have dealt with people since time immemorial. And it's about using that to make sure that we design education programs, financial education programs that equip people with the knowledge, with the skills to make the right choices at different points in time throughout their life cycle. And indeed, if you just pause and think about it, in our case, and when I say in our case, I mean for all of us, including those who are not here, we know that when a person, as an example, runs a business, there are times when the economic cycle dips, and therefore you must be ready to make sure that you proof your business from being a victim of that situation. Don't take a boom to be a permanent state of affairs. Understand that during the difficult time, you will be prepared for it. And sometimes, by the way, it works for all of us. Just to give an example, I mean, when a person doesn't insure their home, let's say we were to allow them to do that, doesn't insure a car, doesn't take credit life, there are a number of things that, whilst they represent products for us from which we make money, but they are also about just making sure that for the individual consumer, we build financial resilience such that they can see through troughs.
I want to pick up, there was such an interesting comment you made about how much information the bank has on you. And a bank often knows more about the consumer than the consumer knows about themselves. And I always think that is such a powerful point. And how can the bank use that information? Of course, this is where the trust factor comes in, but use that information to really, really target financial education. But using that information also, this leads me to my next question. Maybe, Hylton, this is a good one for you, because when it comes to financial education initiatives, do you target your own client base, or do you see it as a national good that you need to do? And I think I am picking specifically on Discovery because obviously you're not a mass market bank, you are quite niched.
Aspiring to be mass market, but I think we're obviously a lot younger than the other banks, but I think we do see almost sort of two tiers in a sense. Our entire business is built on a Vitality Money platform, which is about educating our clients on how they manage their money and how to do so in terms of different behaviors. And we know that there are 5 specific behaviors that are highly correlated with 80% of defaults. And if we can coach our clients in those areas and nudge them and give them incentives to behave better in their long-term interests, then you'll have better outcomes that are better for them and better for us. And so financial education and financial health and literacy is core to our entire offering, our entire product. At the same time, we recognize that there is a much broader a much broader imperative and a much broader issue. And as a group beyond the bank, beyond the bank is obviously kind of core to financial literacy, but beyond that, we see a role that we can play more broadly. And so we've collaborated in a number of areas. In particular, I think the one that we are most proud of and is relevant today is with the FSCA, with a collaboration that effectively brings together kind of our best material and the kind of the insights and the learnings that we've had from all the data that you've described, and it cuts across the savings behaviors, retirement, the insurance behaviors, and the spending behaviors of our clients across multiple different segments, and injects it into kind of the awareness and the targets that the FSCA have at a national level. And the two together have been really successful in creating a program and a project that is aimed at educating South Africans, all South Africans, on specific issues that are pertinent at that time, whether it's kind of the really kind of focused awareness month that we're in now, or more broadly as we go through things like Women's Month and others that are really focused on issues that are specific to that segment. And by doing that and using social media channels in particular, in the main, we've been able to achieve awareness levels of millions of South Africans, so far, far beyond our sort of immediate target market, but really reflecting, I think, the needs of South Africans. And it does reflect the fact that you can work together and collaborate and use the data that we have as an organization, the sort of the material that we've spent a lot of time and effort and money investing in, and then leverage it up for the benefit of the entire country. So I think it is absolutely possible, and we can do it on a micro level and on a macro level.
Yeah, because I think that is interesting. You know, when you use the data, as you've also you've alluded to be able to go that into the general public then and be able to really target some of that financial education. But I also want to talk a little bit about that touch point. Adrian mentioned it earlier, and I really do believe this as well. You know, there is such an opportunity for financial education at the point of sale, and of course through the lifetime of the product, which I think Viviene also raised. But Mary, maybe to put you on the spot, how could the young woman I spoke about earlier have been better assisted? What do you think should be happening at that level when some young person walks in and says, oh, I've got a salary for the first time? What more better financial education could be done at that point?
Often the question we get from shareholders is, why do you have so many branches? You know, Discovery doesn't have any branches. They've got 1 million clients. And, you know, the digital versus the old branch network. And actually the answer that we give often is that, you know, we do a lot in those branches. And the critical role that the branches actually fulfill for us is the face-to-face and advice. So what we've done, what we've been busy with over the years, and I think this applies to the sector as well, is, you know, I think we would say repurposing and retraining and reskilling some of our frontline staff from, you know, moving from when they used to be bank tellers. I think now when you go into an FNB branch, you would find a person who's been skilled on being able to provide integrated advice. And that goes to helping you open your bank account, get an appropriate savings account, deposit accounts, actually something that we take pride in. I mean, if you actually look at how much we've done in incentivizing and in rewarding savers, I mean, that's actually been a very deliberate strategy of the bank, because I do think ultimately success of financial literacy goes into the you see it in the savings of individuals and the nation. And you know, when you go in there, people say, you are sitting in this account, you could earn a higher interest. I mean, those discussions never used to take place around just this, you know, the fact that there's more you can do with the money that you currently have. So in the branches these days, and I think that is still a preference for a lot of people, because in the branches you can find somebody who speaks other languages outside of English. And that's still a very important thing for us to take into account. So I mean, I think so in the construct of the branch, you would look and say, is there somebody that understands insurance, that can actually have a discussion on insurance, that can have a discussion on savings products and long-term products? You know, because I think, you know, often people have just come in and dealt with deposit, but forget that the people are saving and one day they're going to retire. So you don't always get it right. And I think we are really on a journey of making sure that most of our employees can be advisors, integrated advisors, as we would like to have it, because I think it's when you are not trying to sell a product, but trying to find a solution for a customer, that we minimize the risk of perhaps leading with a credit card, because that's what is on somebody's scorecard. So over time, I think, in terms of how we reward, train our own employees as well, hopefully we start getting the right behaviors because we're giving the people the tool sets. And then lastly, I'd also just come on the data point. I mean, I think FNB's got a good tool sets and navigate your money, so that, I think even without asking or being prompted, it will tell you how much you are spending, what your inflows are, more just to bring awareness and to actually make people engage with those tools. That's also improving. I was also very suspicious around whether people are going to actually be putting up all their savings goals and so forth. So it's encouraging to see that take up. But we probably need, I think, the next level of technology, because I think Gen AI, generative artificial intelligence, is going to assist a lot in, I think, in empowering or providing information to individuals in a way that they allows them to make decisions a bit easier. At the moment, I just think that the tool sets and all the things that you can do, it can be a lot for those ones that can access it. And of course, we're also talking about people that don't have access to data, and therefore you're not really talking about those people that can access those tools. But I do think if we look forward, particularly if we take a collaborative effort in putting together information that we are trying to provide to people that make decisions, I do think Gen AI provides us with an opportunity to eliminate having many people having discussions, but just to say, Maya, if you have 100,000, which bank is going to give you the best rate? If you have this profile, where can you get a loan profile? So I do think we're going to get there, and that's going to be a very helpful tool set. But in the meantime, that person that you're talking about, I think in a branch, because of the mindset of just trying to provide integrated advice, we could have done better. And I think we are increasingly very aware that we can do more.
And I just want to add to that, you mentioned something about this, it's on the person's scores, right? I have to sell X amount of credit cards. And I mean, to what extent can you drive better behavior by the way you remunerate your own staff around education? And I think the other challenge is that, from what I understand, you can't use your financial education budget for these conversations. And that's maybe a little bit of a challenge. Maybe I'm going to let you jump in on that, Tembisa.
No, look, I mean, the rules, Maya, are written such that we are not allowed to mix educating with selling. And I actually think that that's right. But notwithstanding that, when a person then walks in as a client and they state their situation, like the young woman you were referring to, what our people need to be able to do using the technology, understanding the lay of the land, is and using, I go back, the information they know about what people at different stages of their life cycle need and are likely to need as the next set of things, to then walk them through the thought process. As an example, have what some in our bank call meaningful conversations with them. For an example, a young person, you know that if they don't have a car, they soon might need one. If they don't have a home, they soon will need one. And as a consequence, you need to then give them the advice that sets them on a path, so that when that time comes to make that decision, they say, oh, wow, my bank, put me in a position to walk a path that takes me to the best option out of the alternatives that are available. Now, I mean, there are a variety of things that that our relationship managers can do. And of course, if I were to just make this point as the last point, when a person has been our customer, has been transacting, doing things, that gives us even more information on them within the rules to then understand their behavior and anticipate their next thing and sort of lead them towards making the right choices without, of course, crossing the lines and doing wrong selling, so to speak.
I'm going to keep this question with you around, because you've spoken about a customer that's engaged and you've got a relationship with. What about the underbanked? How are you using data to try and assess them? What data is available? What tools are you using to be able to engage them, to assist them for risk, assist them in terms of their credit scores and things like that? Because that's a big challenge.
Look, I mean, it's hard, Maya. I mean, in instances where let me sort of take a step back and restate this. The part of the problem with technology is that it can make things very easy, but it can inadvertently lead to exclusionary behavior. In the sense that what technology does is to make possible to understand better, deeper, the people on whom you have information. This is where, by the way, I think it is good that the regulations sort of force us to do financial education largely as a social good, so that we are not self-serving in the process. In other words, we do it also as part of an educational process, a process to pull in those who are outside the net, and those who are at the bottom, you enable them to move up that ladder from, as one commentator said earlier on, I don't know if it was the commissioner, having just a basic transacting account. Yes, it was the commissioner who said some people, the money goes in and then the moment they stand there, they take all of it out.
In other words, at the ATM and
exactly. So you need to begin to, one, bring them in, and then once they are in, help them trust the system, to work with them, work in their best interest, and of course then empower them to make the right choices as they go up the sort of income ladder.
I alluded a little bit to credit scores, and that's a big focus. Every bank now has a credit score app built in, and there's even standalone credit score businesses, and I'm forever testing them out as a journalist. For some reason, I get a lot of junk email after that, so I'm just warning you. Don't go and do what I'm doing. But I do wonder, are we focusing on the right behaviors? And maybe, Hylton, this is a good one for you. Should we be changing the emphasis away from a credit score to sell you credit, or to more of a healthy financial score?
Yeah, so I mean, I think you're speaking our language in terms of financial health, and I think our entire, as I said, I think our entire business has been built on the basis that clients with the right information and the right incentives and rewards can be guided and assisted to really make decisions that are in their best long-term interest, and in the case of us, that of the bank. It's obvious in health. I think people intuitively get that if you wake up in the morning and go for a run, it's a bit painful, but ultimately it's going to be in your best interest in the long term. In the case of banking, it often feels a little bit less intuitive, and it requires kind of cutting back today in order to have that similar kind of long-term benefit. So we've identified 5 behaviors, not a credit score, completely independent of a credit score, but actually giving us better outcomes in the long term as a bank than credit scores themselves do. And it's because it empowers the individual to actually determine the outcome, as opposed to a predetermined kind of credit default algorithm. And so we look at whether people spend more than they earn. Are they savers? And if not, can we gamify it and budget for them? And we've got tools like a financial analyzer, which sucks in all of their transaction history, whether it's credits or debits, categorizes it automatically, and then automatically sets a budget for them simply based on their history, without having to go down and kind of itemize every single line item manually. And for me, I mean, I'm not a budgeter, and I don't think, I think it's the worst thing in the world to have to sit down and face reality every single one.
You don't want to be dealing with me then.
But the reality is, I think everybody feels the same way. It's a very, very tough process, and so we've worked out how you can actually automate that for clients based on their history, and then just by simply nudging them in certain areas, you can demonstrate the benefits. So the first is spend less than you earn. The second is manage your unsecured debt. So we actually present back to people now all of their debt that they have, that they sit with, not just with Discovery Bank, but across the entire system.
And I hope you show them the cost of that debt.
And showing them the interest rates and the cost, and then guiding them as to what the appropriate level is, because it's not necessarily all bad, but it needs to be managed within their affordability. The third is around having the right protection or insurance in place for catastrophes and making sure that you can withstand those, I think exactly as Mzikayise said. The fourth is around saving for retirement in a planned way and appropriately. And as a South African, this is one of the chronic issues that we're dealing with, and the two-part system will kind of will play out in an interesting way in that regard. And then finally, assisting people I think in particular in our kind of context, what's important is fund their property by the time they retire. And either have sufficient funding in place or be able to own that asset. And if you get those 5 right, and you can gamify it, you can nudge clients, you can assist them and educate them, we found that is much more powerful than a credit score. And you can start them on a journey from a kind of an initial limit, and then assist them to manage their finances in a way that's good for them and good for the bank.
Because I get a real big issue with the credit score. I feel often it's like, improve your credit score so we can lend you more. That's a lot of the messaging behind the credit score. It really does bother me a lot. I know we have been cut a little bit because we're running over time, but I wanted to take up this question around security, and Mary, I'm going to put this one to you, because I think financial education is also about security. I know for a fact that every single one of us in this room's data is on the dark web, right? Because there have been so many hacks. Just accept right now there is someone out there who for a fee can find out your ID number, where you live, where your last job was, who can impersonate you or can certainly do a very good job of impersonating your bank. What are you doing around, how should we be better educating people around security? Because ultimately your client is your weakest link. You can put everything in place, but when they want to hand over the PIN to their bank account, how do you deal with that?
So, the issue of security is one that is top of mind, and I think ever growing. I think I was looking at our stats, and I think just in this last 12 months, we've prevented fraud. So this is where we've been able to see that our customers are at risk. I think fraud of close to 2 billion rand. Okay. Of that, 500 million of losses crystallized. Okay, then we look at a lot of the situations and we think, okay, which one is a more clear cut? You gave away your PIN and we've given you information, and you've had all the warnings. There's that pot, but then there's a very big pot where we call it goodwill payments, where as a bank we look and say, sure, okay, there's hardship. Okay, this is unfortunate. Okay, maybe that was a new modus operandi that the criminals now have that maybe we hadn't communicated. So it's a very big issue. So I think we take pride in those ones, in those frauds that we can stop, prevent. But that's a significantly high number, and I suppose we're quite aligned with our customers here to try and make sure that the practices are safe. But it's I think it's a awareness, constant messaging. But unfortunately, fraudsters are also, I think that they're a bit more front-footed than us sometimes with information they put out.
Like this and sharing information, because they are unbelievable.
They listen to us and they said, "Oh, is this the level of thinking? We're doing more." So I think it's real, and I think everything is now. I think digital literacy really for me centers around security. I think the learning to be safe, learning to just operate in a safe way in the internet. I guess I was listening to the education specialist. I can understand why they're bombarded by lots of financial topics, but I do think cybersecurity, safe habits on the internet are really, really critical. We want to make it easy for you to access your money. Look at how you can improve your credit score that you don't like, Maya, but for some people, they
I
can
don't
see.
dislike it. I'm worried about the motivation. That's all I'm saying.
But for other people, they can see where they are and maybe why their cost of risk is so much higher. They can bring it down. But anyway, we've got all these things that are there to help convenience, but then they do also introduce security risk. So yeah, so I think here we're doing our best. I do think my last point here is on I think it's on security, on crime and safety in South Africa, because at the end of the day, what we're talking about is criminal behavior. So I do think that high levels of prosecutions will also go a long way, because I think where there are no consequences, I do think, I mean, we know that we're part of the international networks, but I do think that there are some security issues that in South Africa, if we are a country where people actually get arrested and cases are prosecuted, will also help.
Amen. As somebody who finds this battle as well. Okay, so you wanted to add a comment.
I want to make two different points. I want to make a bit of a pitch for scorecards, because the question on scorecards went to people who don't use it. That was not. But on security, just out of respect for you as the moderator of the panel, I mean, I agree with Mary. And by the way, what bank, I think all banks do this, is to identify the groups that we think stand to be tricked easily, vulnerable groups. Some of my naughty colleagues say that starts at 55 up. The kind ones say 60 up, then I'm happy. But that just says amongst many, and be able to sort of introduce, using technology, digital solutions, protections for them. Multiple factor authentications, all sorts of things.
But when you're over 60, you got to remember all those passwords.
In addition, no, they don't have to remember these ones. They will push them to
I
them.
feel like that, and I'm not 60. Just saying.
Maya, you're much younger than that. Wait, your 10 will come. But I was saying that lightheartedly. Now they laugh too much. Don't be offended by it. But let me go back to the issue of scorecards, and I will be very crisp and quick on it. Number one, they are an absolute necessity. We may do away with them later on, but let me tell you why they are an absolute necessity. Among many factors, if you were to do credit on scale and with speed, you can't dispense with them. And a lot of the time, let's just take it that people ask for credit when they need it. It's not because we force them to have the credit. Whether you run a business, you need a loan to expand it, to take it to the next level, or to see it through a dip. Personal life, you need a house. If you think that you will save for a house, you may never have one. And face the reality. This is a credit-driven economy. Underline, this is a credit-driven economy. Now, debt can be good, debt can be bad. Used judiciously, it can ensure that you enjoy a quality of life that if you were to fix it only within your income, you wouldn't have. But then the scorecards must be simple. We must avoid having them have biases, and don't treat them as be all and all. Where necessary, a human interface, human intervention must come in and exercise the human intelligence. The last point I will make is, people tend to think that a good credit score serves the bank. I repeat, a good credit score, people think serves the bank. It serves the client, because quick access to credit depends, among many things, when you need it. I'm not saying that we force it down your throat, forced it down your throat. When you need it, getting it quickly depends on the behavior that the score captures. Secondly, the pricing of the risk associated with lending to you goes with whether the probability of you defaulting is higher or less. It's you, the consumer. But
Okay,
we've got to be
I'll-
careful how we use this.
Yeah, got to be careful. And I think there's just two things. I think we need to look at things like if I have regularly saved towards an investment and not touched it for 3 years, that should count towards a credit score.
Perfectly.
And when my son of 20 goes to the bank and gets told to take out a credit card to improve his credit score, not great.
No.
So I'm saying we need to talk about this a little bit more off record. But we are need to round up. I need to check with Tembisa if you've got time for an open. Yeah.
Sure, Maya. I agree with you, by the way. It would be bad to force a person to take credit when they don't know.
You also agree. They all agree with me.
Maya.
Questions? There we go, at the back here. Or comments, input?
Thank you. Yeah, Bernardine de Klerk from UNISA. Just 2 comments that I wanted to make, and I think we alluded to earlier on, and my question on the charter also touched on it. I think the one fallacy is that we assume lower income or poor people as financial illiterate, and they're not. There are many of them highly financially literate, and the solution is therefore not financial education. And I think it touches to what forgot her name from the OECD said this morning. We're part of a system, and which lever do we pull for whom? That we really need to understand. So financial education, I'm very passionate about it, but it's not the only solution. So lower income guys, I sat in Hammanskraal with one of the most financial literate people I know, but his economic situation is his problem, not financial literacy. We need to understand the social context, because again, we sat with a father that wanted to borrow 500 Rand for his daughter's farewell dance. He knew he couldn't afford it, but he can't go home and tell her, you can't go to the farewell dance. So the context of our people, we should take note of. And then secondly, I'm talking about knowing your client. I think we also know South Africa are multi-banked. You don't know me, and you don't know my family with my husband's account at another bank. So again, I think it's the people we're interested in, not the numbers, and that's where we need to collaborate. Thank you.
Good points. Thank you. Anyone else want to make a comment? Yeah.
Thank you. I'd like to make 2 comments. One, on data integration from the service providers, meaning the financial service institutions, your banks and your insurers. So let me speak to you as a consumer or as a man on the street. We heard earlier that there's 10 billion rands that gets to be generated on funeral plans. I'll tell you now, I don't have the stats. Brendon maybe can help. More than 80% of the new products that are being sold in South Africa are not first-time product owners. And yet the reality at claim stage, I will be told by the financial service provider that the category of the product, you've reached your limit. So meaning we have a problem as communities, we are over-insuring different participants. So therefore the question, can't as institutions have a mechanism to identify that, look, this life is already over-insured. So therefore you can't then take a new product. That introduces then the accountability that owners of the system, service providers need to also play part, because gone are the days where financial literacy is about giving me a lanyard, a pen, and a nice squeezing bottle, which we often see in union events. Unfortunately, colleagues, this is reality, because we are forever perpetuating a status, and we are going to have nice summits like this and speak as if our communities don't know. No, we have a responsibility seated here to say, how do we hold ourselves accountable? Because speaking here today, there is an insurance company that got an invite, that got a team of marketing in the name of financial awareness, and it has gone out. And the products, there's more insurance companies coming in. If you look at the applications, and guess what? It's not new policy holders. We are recycling the same.
Okay, I can't begin to agree more with you. I remember a reader writing to me saying, the company came, they gave us all soccer balls, and they left with, I signed up for a whole lot of policies that I didn't need. That was literally a quote, and I remember writing that quote down. I couldn't agree with you more. I think there needs to be another summit all about these products. Anyone else want to add to that? Catherine?
Thank you very much. I mean, mine's a question about whether or the extent to which you see financial education and the delivery of financial education and how you do that as a competitive advantage from a financial institution perspective. And the context for that is, to what extent would you be willing to share your learnings? And that's, thanks.
Good one.
Okay, I'll go. And I guess I'll touch on a little bit about the need for collaboration and for really making sure that people are protected, I suppose, and that their context is also taken into account. Because I think in that case, there's a story about I think information. I think information that can assist that person to just actually, you have adequate insurance. I mean, there is such a thing as, okay, now you are appropriately insured. But I do think it's difficult. I think it's difficult because there's a lot of requests that we get as banks to share information. But when you come sign up with FNB, not everybody wants that information to be shared. Okay, so I think there are limitations. I do think our responsibility, though, is that if you're an FNB customer and we have your total information, and okay, then you have more than 3 funeral policies, I think there is something called inappropriate, and I think that's our responsibility. But I think cross businesses, it becomes a bit difficult, and I think this is why these collaborative efforts on education, I do think are quite important, because I think they should be agnostic of institutions. And so back to financial education for us. I mean, I think it's, it's our responsibility, firstly, to make sure that people who serve our customers themselves have got all the financial literacy that they have. I mean, it hasn't always been the case. So I think that's a big focus. And then for us, I think it's I do think that making sure that customers have the right solutions, because if they don't, the policies lapse or the accounts, they cancel the accounts and they move to the next one. So for us, that longevity in the customer relationship goes, I think the core of it is really making sure that people had the right solution as an entry point. So if we don't do that right, I do think that in the long run, we are more prone to lose customers. I mean, some of the customers that stay with us, when you go to the heart of it, it's because they've received the right service and the right support. So yeah, so I think that's a place whereby even if we did not have to do consumer literacy, there's a big part of financial literacy responsibility that we have. Are we open for sharing and collaboration? Absolutely. I mean, I think there's actually a lot of information that we sit with. I think through BASA, some of the initiatives that are taking place, Smart Money Week at this point in time, speak to that. There's certainly more that can be done from a banking association point of view. So I do think that, I think learnings that we get in something where we are really solving to achieve a national objective. And as long as it's not information, I mean, these information requests that come and now the privacy issues, those are the things that are quite difficult. And I think from a regulator point of view, I do think that if we define, and I think there's an overarching theme of what we're trying to achieve, and we align regulations to try and achieve all of that, Catherine, that will go a long way. But yeah, I think when it comes to learnings from a BASA point of view, absolutely willing.
We are tight on time, but I know, Hylton, you wanted to add something there.
Be quick, I guess. I mean, maybe a slightly different perspective. In the sense that I think we've seen that with the right kind of rewards and benefits, clients are more than happy to give consent to us as an organization to kind of aggregate their information where they know it's for their benefit. They know that we can use it to provide them with better advice to provide them with better products, to make sure that what we're giving them is more relevant and there's value for them. And we're able to do that. So we're able to kind of aggregate all of the data from across all organizations and give clients a kind of a singular view of their finances, and we can do that and educate them in the process. So I think we see it as a competitive advantage in the sense that it enhances trust that clients have with us as an organization, and that's allowed us to grow on the basis of a relationship, which is a long-term one and built on the foundation of real trust and insight into what our clients need, and be able to advise them at that point of service. And then more broadly, we are kind of inspired and motivated by the ability to use all of this information for the greater good, and to be able to kind of send it back into the public domain, and to make it all available. So I think that, you know, our view kind of is that it's proprietary on the one hand, but is very much for public good in the sense that all South Africans can benefit from these insights. And that's what, you know, I think that is something that we absolutely are committed to doing, and hopefully that's kind of what people see.
Well, that's good. I just want to sum up quickly on this, because I think what's come through me, and especially the last few comments, has been there's two aspects to financial education. One is when your client understands what they've bought, why they're doing it, and especially I think Viviene raises at claim stage on things like insurance, they have a positive experience. You have a client for life. So that is a positive, you know, business imperative for financial education. And then you've got the national one where you want to have more clients in the future. And by the way, the reason you don't have a lot of clients is because they're in so much debt, they just can't take on more savings products or insurance products or anything. So we have a real big national crisis. And I think for those are the two aspects really. And we need to work on how to put that all together and to collaborate. And I'm looking forward to all the collaboration that I'm going to see in the future after this summit. So thank you very much to all three of you. Thank you.
Thank you very much, Maya, and your panelists. Please don't run away. This is a very rare opportunity to have all of you in one room. We would love to take a photo opportunity, if you wouldn't mind. And I'd love to ask our Commissioner, Unathi Kamlana, Deputy Commissioner Kathy Gibson, and I thought I saw Deputy Commissioner Astrid Luden. Yes, we can rip those off. Thank you. It's going to be very, very quick, but I think it's a very important one to have. You good? How DJ, not even a little bit of music, Inyana. I know it's the JSE and all, but please. Thank you. This is great. Thank you so much. Can we give them another round of applause, please? As we wrap up, such great insights from all of the panels, and especially this last one. So much for us to really chew on. But we're now at that point where we're asking, okay, so there are these issues, there are these potential solutions. We need to collaborate, but what concrete commitments are we making as a sector? And so I'm going to ask to come up on stage Kathy Gibson, the Deputy Commissioner of the FSCA, and also Chris Axelson, Acting Head of Tax and Financial Sector Policy at National Treasury, so they can just wrap this one up for us. But as they come up, just to mention to our online audience, thank you so much for staying connected with us and for all of your comments that are coming through. Ingrid Goodspeed, Sylvia Papadopoulos, thank you for all of those nice comments that came through. Also applauding the DBE for the work that you are doing with young people, especially also rolling out robotics and coding and all of those kind of things at schools. So great work, and people are noticing. Thank you so much. Let's give them a round of applause, please.
Yeah, you see, we're taking collaboration very seriously. We're even sharing the stage, sharing the mic even.
Sharing the mic.
So as indicated, my name is Catherine Gibson. I am one of the Deputy Commissioners at the Financial Sector Conduct Authority. And Chris has very graciously agreed to come and share this platform. And I think really importantly so, because we are ultimately also responsible. All of us are accountable and responsible to someone. And as the FSCA, as the conduct regulator, we are responsible and accountable and led by the National Treasury and the Minister of Finance and ultimately Parliament. So thank you very much for joining us. So in South Africa, we have a languishing economic climate, and the cost of living crisis is constraining household and SME finances. So we've heard quite a lot today about the balance sheet. You know, you've got the balance sheet of businesses, but you actually have a household balance sheet as well. And at the same time, the financial sector is rapidly evolving. And this results in an increase in the number and complexity of the financial products being offered. So under financial pressure, the lack of basic financial literacy skills amplifies the risk of poor financial decision making, which in turn compromises or can compromise our financial security. So financial education aims to close this gap. Our task today has been to change, or at least to start to change, how we think about financial education, so that it becomes integral to all of our business operations, led from the top, but supported and all the way through grassroots. So Chris, much has been said over the course of the morning. What are your thoughts?
No, thanks very much. Thanks, Kathy. Thanks everyone for having me here as well. I think from the National Treasury perspective, we're fully behind trying to promote better financial education across the country. I think what really stood out for me today was the levels are so low, and they continue to be so low. I remember having conferences like this 10 years ago, and everyone was bemoaning the level of financial education in society, and it doesn't really seem to be getting better. There's a lot of work that's gone into it, but we need new policies. I think this, as today with this draft charter, is about trying to take a step forward to actually get some improvements there. So that it really stood out for me today. It was also interesting just in the last discussion that it's not just financial education, there are conduct issues there as well. And you've got to think about this treating customers fairly in a much broader sense. So it's not just about financial education, it's a broader aspect. From Treasury perspective, you know, we're involved in the National Consumer Financial Education Committee. There are lots of strategies and implementation plans there. We hope that this charter will link with that. So we've got to move forward, and it's got to be coordinated. There is also the conduct that the FSCA are putting together on financial education. So this charter is going to have to fit with that as well. So these are very good steps. We're going to be very supportive of doing it and try and help FSCA and industry along this process. Thanks.
So together, we are proposing 5, and I emphasize this as being draft commitments, very much a work in progress. And really just the first step. And these are intended to progress positive financial education outcomes. So I think what's being emphasized and underscored today are these concepts of outcomes, of impact and positive outcomes. So this charter is intended, or these commitments are intended to try and progress that in a very meaningful and measurable way. There's been some conversation today around measurable, what's possible in that regard. So I just invite you that there is quite a small QR code on the screen. I hope it still works. And if you scan that, you'll be able to see a copy of the draft commitments. I see my colleague here is trying even from the stage. And so what we intend to do with, so these really are this is the first time we're going to be seeing them and sharing them, and anticipate that there will be a lot more engagement on this going forward, but I'll talk to that about in a bit. So our first commitment, our first proposed commitment is to adopt a financial education. So this is what we're saying is each one of us and our heads of organizations, we're going to be encouraging, including us as the FSCA, to be moving and making and pledging these commitments. So the first one is to adopt a financial education plan for the organization that is board approved and published. And I should say that as the FSCA, we are leading by example. We actually have our financial education plan, which is also being, and it's relatively new, being published as well. Just like all of you, we strive to be accountable and transparent too. So this commitment, with this commitment, we are challenging financial institutions and others to publicly demonstrate support for building financial literacy, capability, and financial well-being by outlining their financial education goals in a very, deliberate and tangible way. So we encourage you to be ambitious. We encourage executives and other decision makers. So it refers to the board, but that there are other. We understand that there are other types of governing bodies as well. To take ownership and to embed or renew focus on financial education. So strategies may include things like assessing needs, setting clear goals, implementing targeted programs, and partnering with experts. Our second commitment, commitment 2, if we can just go back on, thank you, is, so it's all very well to have a plan. It's another thing to stick to the plan. So our commitment 2 is to deliver targeted financial awareness and education programs in line with your published approach. And this commitment really is about making sure that we put our money where our mouth is. So many households and communities, as have been spoken about today, reflect a chronic financial literacy gap, leading to poor financial decisions and limited financial inclusion. Yes, we have a very high bank account rate, but how those are being used, and Magda earlier, she spoke about the quality of financial education, the quality of financial inclusion as being one of the aspects. So empowering individuals with financial knowledge can build trust in the system. That's also been quite a common theme today, and promote the use of suitable financial products. Supporting strategies in this instance, we're thinking around whether it be workshops, webinars, digital platforms, as well as community outreach, and of course there's the traditional media. So transparency and accountability really is key.
Okay, if we move on to, so we've done 2, so your board or your executive committee decide on a plan and you publish a plan, then you start delivering a program for financial education. But now the third commitment is to deliver financial education in line with best practice norms and standards. So there's no point in having a financial plan that you implement that isn't up to scratch, that isn't going to be effective. It must abide by these norms and standards to be as effective as possible. You want your consumers to be able to understand this complex financial landscape. You want them to be able to achieve some financial security. So what are those techniques? So you've got to look at the teaching techniques. Is it appropriately using digital technologies? Is it accessible on all the different platforms? Is it Does it have some feedback so they can tell you whether it's working or not? These are the standards that we need, at least in a plan, and that's one of the commitments. So then if we go to the next commitment, this is about striving to increase the impact of those financial education programs through suitable resourcing, strategic partnerships, and digitization. So you've got your plan, it's been approved, you start delivering it, it's got norms and standards, but now how can you make it even more effective or get it to a higher or broader reach to get to more people? So is it scalable? Can you just push it out to many more different people? Is it effective? I really liked Magda's presentation this morning about you're going to have different groups and they're going to have different ways in which they can learn or different shortcomings. So you've got to say, well, can I be more specific and appropriate for the different types of people that I'm targeting to get more impact? You know, as businesses, this will cost money. So you want the best bang for buck. You want it to be effective. So how can you make it more effective? But it's a commitment to try and use evidence-based solutions to improve that effectiveness over time. And then finally, commitment 5, so the 5 commitments. This one is to prioritize the financial wellness of your customers. And this is a much broader aspect. I really like this aspect. It's about treating customers fairly, the TCF principles. You've got to say what is actually in their best interest. It's not just about yourself as a firm, and there were these very interesting conversations on this panel about the different types of products that were pushed at different times with different, you know, even financial education events, which is very concerning for us as regulators. So what is the financial wellness that you need to get for your customers? And you've got to look at everything in that respect. And I think those are very good. It's a very good commitment to finish up.
Oh, thank you. Yeah, as the Financial Sector Conduct Authority, we obviously very much support the commitment 5, which really I think just ties all the pieces together. And in fact is increasingly, as Magda had spoken earlier, this is increasingly the way that we're thinking around policy for consumers, for households in a much more holistic way, because it's not just financial inclusion for the sake of inclusion. It's not just education for the sake of education. We are striving for these things so that our households and small businesses can actually be much more financially resilient in a very real way. So to conclude, everyone in this room has, and whether it's this physical room as well as the digital one, has a role to play in elevating really the level and quality of financial education. So thank you very much for joining us here. These draft commitments, as I already started with, should be seen as a first step. It's a straw man to straw woman to be refined by engagement, and again this word collaboration. I think it's very much, there's so much learning, we're all coming from different perspectives. It's critical that we actually pull those together and see how do we get the biggest change through what we commit. So just to have a sense of process, stakeholders and yourselves and those who are interested we're aiming for 3 months to be considering the information, all this information, discussions from here today, to provide input by the end of November, which is just before everybody goes on leave. So, you know, I remember actually when back in the Treasury Day, there was this ongoing request that used to come from industry to please not release something on the 28th of November and then ask for comments, you know. So we're being very kind and generous here. You know, we're rolling it out early. We will then be taking and collating all those inputs and distributing a revised draft and seeing if there's, you know, how can we refine and improve. And this won't be an inflexible process, very much depending on how the inputs are submitted and the kind of comments that we get. very much open to have a conversation as well, and see how we can refine and improve. So we're always open to conversations. And then we will be aiming to distribute a revised draft by the end of February, which coincides very neatly with budget. And then looking to see, for those who are willing to take the pledge, take the plunge, aiming to do that around May, June next year, once everyone's had a time to really process and think around the final commitments. So with that, I would like to challenge each and every one of you to please be very actively a part of this process. And in closing, I would like to thank, now there are a lot of thanks here. I would like to thank you firstly for your very active participation by being here today. This event would obviously not have been possible without, I mean, we always speak about the moderators, the panels, but of course the audience is what makes it all impactful. Thank you to our partners in this event, being the Financial Services Consumer Education Foundation. I really think we need to change that name. I always struggle with it. Visa and the JSC. Now, as you can imagine, there was always a huge amount of work that goes on behind the scenes. So thank you very much to our very own Lindwall Clark. And Alicia, is Alicia in the room? Thank you. And then very ably supported by Beverly Berger, Audrey Langenhoven, and our whole consumer education communications team. So thank you, FSCA. And then for the leadership, so Chris and Treasury team, for your leadership in this area, as well as my co-deputy commissioners, Astrid Luden and Fazana Badat. Astrid was here earlier. Unfortunately, she had another commitment that she needed to get to. Fazana is overseas at the moment, but in their absence, just to recognize how much they were a part of the ideation and energy that really contributed towards putting this together. And then lastly, please recognize our commissioner, Unathi Kamlana, in his vision for this event. I hope he is. Where is he seated?
He's just gone outside.
Oh, he's doing an interview. Always busy representing the FSCA. So with that, I'd really like to again thank all of you, and I really appreciate you being here. Looking forward to taking this conversation and all the lessons forward.
Thanks very much, Kathy. Just to mention that the commitment document will be emailed to everybody, and it will also be on the FSCA website with contact details should you need to get in touch with any one of us. Thanks so much. That's how we come to the end of our program. It's been such a wonderful conversation, such a wonderful energy in the room. It gives me great hope, and I hope it does to you as well. Great hope for what we can do collaboratively around financial education. Thank you, everybody. Lunch is served right outside. Enjoy the rest of your day. Oh, and while you are on your way out, the FSCA has got a mobile unit that we use for all of our outreaches and road shows. Please stop by and say hello to us.